Good morning, traders. This is Rose. Today is Friday, September 9th. Welcome. Just doing a quick adjustment here with my chart. So just give me 2 seconds, please. Things are going to actually change a little bit on some of the charts. I have to redo once I switch to the December contract. Doesn't carry over the graphics, the annotations and all the other drawings that I may have on the old contract. But I'm not ready to switch yet. The September contract volume is still slightly higher. So I'm going to wait for these numbers to get at least equal, and then I will look to switch. But you can switch if you like. Bars are going to be a little off, so when I'm reading the price action, you're going to be a little bit off with what you see on the new contract. Okay. Some of the members are reporting something, so I have to check on the Trader website. Give me 2 seconds. Okay, so there will be some, well, for those who are asking, you can't obviously hear me, so let me post my comments on Discord. Hang on. All right, I'm going to begin. All right. There it is. Okay. All right, so yesterday, let's talk about what has happened. So let me put this aside here. The day before was a very climactic, strong bull day. And we had a bull channel. With a bottom of the bull channel, we ended up breaking down at the open, and eventually I'm going to get rid of these lines, but try to look over them. So the bar one was a bear bar. I was looking for a buy zone. I wanted to see the price pull down a little bit. But there was a bullish gap right here. And the bears try to close that gap, but we need that bar one to really close strongly bearish. It did close bearish. However, it failed to get follow through, and bar two actually ended up making a slightly higher low. Bar two's low did not breach the low of bar one, so basically we're getting a high one signal bar right there. Okay, so that's when I said, okay, so this is kind of fizzling. It's not really coming down to where I wanted to buy. I might need to look to buy earlier. And bar two was a overlapping bar, so we have a 2-bar trading range, but it really closed nicely bullish. So it's taking out the almost 70%, 80% of the prior bar, and it's got a higher low. So I was thinking at that time jumping in with a buy stop order 1 tick above it, but then I decided not to do that, and I said I'm going to wait because it's still 2 bars. If we get a breach above bar 1, if the bar is strong, I'll jump in because we're probably going to go up to the bar 80 low and possibly the close of yesterday. And we're not far from, we weren't far from the high of yesterday, and 4,000 was always the magnet, which we fail on Wednesday to tag that round number. And we got to bar 3, and then I said, okay, this is good. We're getting actually a 3-bar measured move combo, and we're going to end the measured move somewhere around here. In fact, I'll do that so you can see right here. At the opens, I look for these quick measured move targets. They're very lucrative. And I said, once we get to that measured move, you really need to take profit. So if you're actually looking to buy the bar 3 close, that could have been really damaging. I knew that we were going to go to further up, go to the EMA, definitely there. But, you know, in between, price can move down. And I said, ATR was just too high. I think it was around like 12 points. I'm not sure, but let's take a look. So around there. No, it was actually 15. And then right there, it came down to 14. So 15, 14 points long is, you know, bars or pullbacks that you could experience. So I said, this is where the market is going to probably, these bulls are going to take profit, but I don't think no one's selling. I don't think we will come down. That would be ridiculous, but I still kept my eye on that buy zone that we left behind. Okay, so after a pullback, market continues to go up to EMA and then furthermore. So this is your pullback bar, but it's actually a continuation. We've made a new high now. And this is your first leg, but bar 4, even though it made a new high, it's actually a, kind of a pullback. So here comes your second leg. And then once we meet that objective, then you could take profit. Okay. So I've taken profit, and then we come down with bar 7. Bar 7 is generally a news bar. So around that time, 10 o'clock, you have something comes out. And if there's no something, machines could be programmed to do something. So you know we're reaching an objective. You know, you should be taking profit because you're going against these bars. I'm sure there are sell orders already there. So bar 6 starts to take profit. We do have a spike pullback, spike bar 3, pullback bar 4, and then the channel began. So I said if we're coming down, most likely we're going to test the low of bar 4 because that is the pullback bar in the spike pullback channel pattern. And I said there are probably limit order buyers underneath that bar 4 that you may want to look to buy. Okay. And yes, it's a strong bear bar. It's actually the first sell. But again, at the close of that bar, buyers started to show up yet again. So this is actually the true pullback. So you have a pullback, okay? And then even if we had another pullback, say bar 8 actually breached the low and came down, maybe tested this high. But looks like I said, bulls are really trying to keep that gap open so that they can become a lot more bullish. So they're looking for a good pullback to buy. Now, we did not get continuation pullback bar with bar 8. In fact, it ended up having a higher low and a really nice close. So you could say, hey, this is high 1 and this is high 2. I'm going to buy that. Or you could say, no, we made a new high, which we didn't, but that is the high 1 and you're looking for a high 2. But at that time, once I see no continuation for bears, what you can do is you could just buy 1 tick above. You take some profit at the highs, okay? But basically you are targeting these highs or the high of yesterday. even if you haven't entered because bars are going sideways and you may think that this is a limit order market and there are probably sellers sitting above that bar 8, which they were sitting, if you did buy there, your stop is either under 8, I would put it right here. Okay, so you're looking to make a 1-to-1, but you're in jeopardy because this is right here, 1, 2, 3, well, 1, 2, 3, 4, 5 bars overlapping. If the bulls actually, I said, both the close of bear bar strong, that means they're probably going to sell a strong bull close bar at that time. And they just did that exactly. So we're still in a limit order market that we have not yet morphed into stop order market. So if you didn't buy with 1 tick above, that's fine. You know, just wait. And you see we get a very weak bear bar, again another higher low, right? So, and we made a high. You see that high right there? So basically that's a much better stop order buy above, but really, and then you get a breakout. So what you can do is you can either buy that or buy 1 tick above, or you wait for a pullback to the breakout point, or wait for a pullback somewhere around EMA. Okay, so put a buy order there with a limit order, buy order right there, look to enter, or do nothing, just wait. This bar is very risky. I mean, bar 10 at that time, I mean, measure it, right? So it's a very risky bar. So if you buy it, your stop goes somewhere, again, here, maybe underneath, but I would put it here. So you're really buying with a risk. So maybe it's best to wait for a pullback because that is the first breakout. Anytime you have a breakout, right? So you know you're going to get that pullback. Enter with that. You know, yes, you basically are, you know, impatient. You really want to jump in. You see this bar. You think market is going higher. You want to jump in. But best to wait, you know, just put a buy order here, get activated. You're going to get a lot more move. Or just wait for bar 12. We made a new high. So the market is making new highs steadily, right? So we're making higher lows. We're making higher highs, right? Not compared to that, but compared to the prior highs. You get another pullback bar, right? So pullback continues down with bar 12, but the bar closes. Now that's a really nice bar. Buy that. That is a bull flag. And so it's also a bull flag at the EMA. Think about it. High 1, maybe high 2 bull flag, right? So market is in. This is going to have a nicer leg. We go up, and then we go furthermore up. So you could also say, if I measure this from there to there, that was the measured move target, right? So we did not get to that measured move target for a long time. Even, I mean, at the end of the day, we have not. You could say that is the measured move. Or you could have said, well, that was the measured move, but really, that is just a small, maybe a 1-to-1, but the measured move. You could say also, what if I just, you know, measure from here or there? You're still hitting targets, but at this point, you're in. You could trail that stop, okay? And that's exactly what we did. I warned you about this trend going up and up and up, but the bars were getting smaller and wicky, so they got a bunch of wicks. We did meet the objective. We met a bunch of targets, which is great. But the bars are getting very, you know, weak here. So, and I'm also counting wedge tops. So here we have, let me see on the check. I did not count from here. I was counting the wedge tops from here, and it was a tight bear bull channel. But you can see it. It's there. So right there, and right there. I saw this bar. I said, that's not really a good sell signal bar. We're actually overshooting the wedge tops. I didn't like it. I didn't want to sell below it, but the bears did sell with the first sell, 24, and then the second sell, 26, and they got their 10 point, 5 point, and 10 point. I wanted to buy at the EMA. That was I guess I could say 1, 2, 3, 4, 5, 6, 7, 8. That was an 8 bar, but 8 bar is when you're looking for a 10 bar, 2 legs down to EMA or up to EMA as a reversal. 8 bar is fine. You should get minimum 8 bars. Okay, so, but anything more than that is okay. Obviously, you don't want to see 20 bars trying to get down to somewhere that may not even happen. But 8 bar is okay. They got the 8 bar reversal back to EMA. I was really looking to buy this. I didn't like the bar 26. That kind of posed as strength. It's a strength bear bar. And I started to think, could this actually be a bear flag? I started to doubt that bulls were going to, print another follow-through bull bar, which I wanted bar 30 to be a bull bar. But they seem to be not wanting to buy it at all. Okay, so I didn't see it. And I said right there, I did not buy that. I didn't like it at all. And in fact, they couldn't even go up above. It wasn't really it's a good close, but you really need a follow-through bar. At least this to be maybe a bear doji, something. And then even if it's a bear bar, maybe close up here. You know what I mean? Then I could buy that pullback. That's how it works. But it didn't work that way. Then suddenly you got bears wanting to sell this. This was, I'm pretty sure it was news related because yesterday a bunch of feds were talking. So all this was whatever Jerome Powell was saying. It's also technical, just went back up, which was great. He kind of helped. But then we ended up getting a head and shoulders pattern. Look at that. Okay. So you have a neckline. And this bar was too big, too quick. But a bar like this is a high probability bar. Now, when you look at the entire, up until bar 31, the entire charts from here to there, okay, we have several high probability bars. They're risky bars, but this bar is going to get continuation. This bar is probably going to get continuation after a pullback, right? You get bunch of 3, 4 bull bars. The first pullback, the bulls are going to buy that with a limit order or any reason. Now for bears, right, so they started to get a little bit bold with that bar 26. But you see this bar? When you see a bar like this, just sell it. Just sell it. You're going to get continuation, all right? But if you're selling, take profit around underneath these big bars or breakout bars, right? Even that breakout, look, they kept selling. This right here was support, double bottom, okay? And also that leftover, there's a bull gap there. So bears try to close that gap, but they really needed to pull down to the bar 1 body open, okay? And they actually did that. They closed that bull gap. When bears close a bull gap and they come down this much all the way to the open of the tick price, the day's open, bar 1 open price, you're kind of in a trading range now. All right, so we came down. We started to think about what could happen next. I wanted to see a little bit further down because I had a target down here, and it wasn't too far away. It was actually very close. But once the objective is done, you're in the buy zone. There was a breakout, okay? So there you go. So you see that? So they have tested this bar's high immediately. 1 tick below, they actually dipped. So that there's going to be some kind of pullback, but I really wanted to see bulls to maybe market to go up a little bit and then sell again, right? So I was looking for a bull bar to sell above with a limit orders. I did not want to sell this doji. I was like, what is that? And then by bar 35, what kind of bear bar is that? So now I'm completely weirded out here, thinking this is going to fail, I think. This is, I mean, bears are not going to be able to sell this. Then we start to think, are we going to go back up to this bar? Or where this climactic move, started but fizzled out with a, it is not breaking down. It's not getting a breakdown. So this is definitely a TR trading range. So bulls started to show up, and then we start to say this could be a V-shaped bottom, and we're probably gonna close these bear gaps. I said look for 3 bull bars opening and closing. They're stacking up without overlapping. That is basically the sign of a V-shaped recovery, and that is the target, that whole bar. But there are sellers waiting there because it starts. Look at this impulsive sell bars. They're 1, 2, and 3, and then continuation. So that means sellers are very heavy here. You may want to look to sell or take profit for that matter. Okay, so if you bought this bar, the bulls started to take profit, but the bull pullback bars were very, very weak. And so I kept buying, but doesn't matter. You buy, you're going against right there. They're trying to get above this bar. Institutions are trying to, because this is a bad signal bar, they're trying to test above it. And above this bar, there are probably sellers waiting to sell again, hoping to get back to maybe the 50%. But those sellers didn't show up until here. We went sideways a little bit because we are now in a trading range. So, but we're definitely not moving underneath the EMA for about 20 bars, I think. I'm not sure the 44. Yeah, 20 bars. So we know this is a trading range. Okay, so treat it as a trading range. Buy at the lows, sell at the highs, right? So there you have it. They keep buying the lows, buying the lows. We now have a wedge, okay, with a higher low. And bar 76, this is where I did not trade. I didn't trade any of this. I actually stopped trading midday, but I was watching. And I wanted to jump in. I don't want to trade this anymore because I made the money, coming down and going up, and that was it for me. So, but you could see that, we have higher high. I'm not higher high. That's a higher low to this lower low, and then you got this. So basically, what you're having is an inverse head and shoulder, okay? And we have a double top. Bulls are trying to break above that double top. Let me put it this way: if there was enough time, we would have probably, let me see if we actually, so here's your breakout. We would have gone to that measured move target if there was time left in the day. This would have probably gotten this one big bar, but no time. But still, look at this breakout, and it got in a continuation. That was a sign that bulls were really trying to get to these highs. So no time left in the day. I don't know what happened. So let's take a look at here. Okay, so the market did go. Look, right? So you have that trading range that I just measured. Here is your breakout. Look, they actually met that measured move target after hours with this bar right here, which was 1 a.m. and then started to come down. See that? So that measured move did work. Let me change that. All right, so what do we expect now from today? Let's take a look real quickly. Market is about to begin, less than a minute left. Well, we have bull bar stacking, good for the bulls, obviously. We had we could not move underneath this September 1st. Bears did a great job, but we are now in a trading range. This is more of a trading range, okay? So we had a double top there, we came down. Now we're at a conjunction of a bunch of moving averages. The market is deciding what to do here. Now, these highs are probably magnet. Can we push further up? We might get above the 50 SMA, this red line, okay? But we could end up making a double top and then come down. So today is Friday. We might see some volatility again. And also, Feds are still speaking. We have Feds Evan and 2 Feds are speaking this morning, I believe. And so be careful. They're going to move the market. One of them already did damage yesterday. And also, you know, Fridays, week is trying to close as high as possible. Okay, so the bulls are going to try to probably close somewhere maybe above, but we do have that double top probability. Now on the weekly, they're trying to close again as high as possible. Now, can this week be a outside up? This is where we might end up going, but that is about 35 points away. That's not bad. We might be able to go there. And if we do, okay, then we would have an outside up week, okay, but they are going to have to close this up. But still, this is maybe a 2-legged move or one big leg, okay, and these are pullbacks, basically, what you're seeing, pullbacks. But what does it also look like to you? Right? We try to break above it, but we failed. What the bulls are trying to do now, get back, okay, to these highs and break out and keep going up. Now, I don't know if they're going to be able to do, because if we do go up here, this could also end up being a bear flag. So we could then end up getting a regular head and shoulders pattern. So this is very interesting. We're in a trading range at the moment. So I'm looking for up, down, okay, up, down. Are we going to get the third push? Or here's another, maybe a possible wedge, down, down, and then that. So very interesting. Let me see, 1, 2, 3, 4, 5. We have already met that target and failed. Bulls are still trying to get back up here. But I think today and this week, we might test that and close it that way. And the next week is probably going to be sideways. So this right here, trend line, is attracting because we've tested it before and we could not get above it. And what bulls want is to close above it. You see that this is the next target. This is where they want to go. But obviously that's weekly chart and that's going to take a long time. Right now I'm interested in this moving average blue. Okay. Month is halfway. It's not even the halfway actually. It's trying to close halfway up in that body. So yeah, we have some bull targets. We already gapped up. Again, I'm still on the old contract. I think sometime midday I might switch, but I'm going to leave it there for now. Okay, so we have a gap up. And we're definitely above, you could say, here is the measured move target. Can we get up there? Well, bulls need to close 2 bull bars. 2 bull bars, okay, to become bullish and have a bull trend. So let's take a look and see what the bar 1 is going to do. It's trying to close bullish enough with a bull gap, but we have opened way above, okay, way above the high of yesterday. Could this be a, could this be a price that is too high? I don't think so, because market was down quite a bit. You see right here. So this right here, you see that equal top right there? There's a liquidity area there. So I'm going to mark that. Actually. Okay. So this is, I think, the bulls are trying to get to. And it's literally underneath the measured move target. Okay, bar 1 closed really nicely bullish. It is trying to get a continuation bull bar. 2 bull bars would put us into a trend mode. Just hang on, everyone. I'm just seeing the messages. I don't know if you guys, I think there's still members having a hard time coming in, so let me type up some messages here. Hold on. Bulls need to close that bar 2 bullish to continue to go up, if that's what they want to do. Seems to be a good area. We are closer to the Globex high than the Globex low. Now the Globex session is not that big. We don't need this. Now, high of last week is right here on the hourly chart. That's also magnet, which is exactly where the liquidity zone, a little bit above the liquidity, well, the liquidity zone begins, and then measured move actually is marked. So basically, high of last week is a magnet. So we're going to keep pushing this. Bulls are trying to close this bar bullish enough to continue to go up. Now I'm going to take a look at the news. Charles Evans scheduled to start at 10 o'clock, and he's going to talk inflation. He's going to talk rate hikes. He's going to talk jobs. Who knows what he's going to talk about? But all of that is, algos are going to be hunting for exactly some keywords to move these bars left and right and up and down. So bar 7 is going to be epic. And then we have wholesale inventories at 10 a.m. right around that time. Then you have Christopher Waller at noon, and then another person. I don't know who these people are, why they're talking at noon together, maybe different events. But yeah, so we're going to get some good swings. But let me show you guys some things here. I mean, they need to maintain this gap up, right? So if you actually both one tick above bar 1, you're hoping that we're going to get up here. But you are buying with a price that is higher than the average price. Average price is down here, okay? Or if you actually measure from here to there, okay? So somewhere here is average price. And this is why the bar 2 is struggling. And this is why I don't touch bar 1 and bar 2. The only time I actually look at, if I can actually jump in and trade the open. Let me see if I can demonstrate real quickly, because I know that we're going to try to go up here, but I'm waiting for bar 2. Let me open a chart. Okay, bar 2 is now overlapping with bar 1, and bulls could not have a breakout bar or breakout follow-through bull bar, and that's weak. Why? Because some bulls are hesitating possibly that this might be a too high of a price. Okay, we're way above the high of yesterday, and that's problematic. So let's see. Let's do that. Just give you guys okay. Here is a 1-minute chart. Okay, now pay attention. Somewhere around right before the open, okay, So the last bar is this bar. So I'm looking at basically what can the market do? Can I buy this? Well, here's a wedge, okay, or here is a wedge, okay. So you have nested wedges, or here's a wedge, 1, 2, 3. That well, or you could say 1, 2, and 3. Okay, 1, 2, and 3. Or you could say 1 pullback, 2 pullback, and 3. Or 1 pullback, 2 pullback, 3. You see these nested wedges? I'm looking to buy now. Yes, market was down. So you could put a sell stop order here, but chances are this is going to reverse. So I'm looking for a bar closes bullish. What I'm going to do is I'm going to put a buy stop order right up around there, okay, on that bar 29. And I'm going to have a stop right there. And I'm going to get filled as it goes up. I'm going to trail that stop and trail that stop and trail that stop and trail that stop. But somewhere around here, you see that? But this is what I'm interested in. I'm going to scalp here, but this is the bar I'm interested. Somewhere around in that bar, I am going to go flat. So let's take a look at yesterday. Yeah, we have now 3 bars overlapping. Big bull bar. Pullback bar is 2, and another pullback bar 3. Bulls are still trying to break out. They're still trying to go further above 40, but I'm not interested. So here we go. So this is another, see this? I'm going to put it on the last bar before the open. Okay, the last bar before the open. Now, what do you guys see? Well, I do see a bear channel and really bearishness. This is bearish, right? So, and there's doji. So this bar right here, okay, open bullish, but it's not going above anything. I am not inclined to buy any of this. In fact, I'm looking to see if I can actually sell this. This bar is the first bar closed. Or you could do, listen, I'm going to put a sell order here if we do break down, okay, because no bull bars are showing up. And if we do get filled, you're short and you're making money, okay? But you're not going too far. Plus, there is a bear pennant or wedge, and we just broke down. So you know you're going to get 2 legs to sell. Leg 1, pullback, leg 2, but we're not also breaking down, so you may want to take profit. So this is how I mean, if you look at those opens, this is how I trade the open if I'm not talking. That's how I look at it. If the market is bearish, I'm looking to sell. But if the market is bearish and it made really strong wedges, that structures are there, I'm going to look for a good bull close and I'm going to buy above it. And I have a chance of making 5 points easily. Just for a scalp, and it might sometimes go further up and up and up. All right, so look what happened here. Bar 1 is a beautiful close, but where is the continuation? You need the second bar to be a bullish bar. And I said, and that's because if you don't get the bar 2 bull bar close on its side, we're not going to get that trend. But I wanted to see that trend. So if we didn't get the bar 2 bull bar bullish close, then what do you think is happening? It's too high to buy. Bulls need a pullback to buy lower prices. They did not agree that the market is a good average price for them to jump in and be bullish. So what they do, they're looking for a better contract prices, and they're just looking for a pullback. So bar 2 is a pullback, bar 3 is a pullback because we're making new lows. Now we breach that low, okay? So I'm looking for bar 3 is another new low, but if it does close bullish, there might be some buy orders, stacking above bar 4, okay? So bulls are looking for a bull flag formation. We pulled back down from the Globex high. Okay, so what do you think is happening here? There's 1, 2, 3 wedge with a higher high double top. It's the reversal. The bears try to reverse this down, but look on the Globex chart. You got 1, 2, 3, 2 bull bars, one of them closing on its high. Chances are you have buyers waiting around that area, maybe the open of the bar or the wick. I would say somewhere in the wick of that breakout strong bull close among the 2 bars, somewhere between there and there, buy orders, limit buys are stacked. And some of them got actually filled. So now it's going up, but again, even the Globex chart is overlapping. Bears are trying to swing this down, okay? So I want to see what the bulls are going to do here. We have an outside up bar now, okay? We have possibly a failed inside. We have a double bottom, and bulls are trying to break out and get a measured move up. But let's see how that bar closes. If they do close that bar strongly bullish and maybe 1 tick above the high of bar 3, and they're going to try to hit the gas probably and try to go up. Okay, so maybe they may have found that average price, because look at it, right? So this move up, if you actually measure this move up from down to here, that's the 50% just about, okay? Although I might be lying, so let me measure. Yeah, look, 50% buyers did show up. So on the higher time frame, Globex chart, buyers did find average price at the 50%. So now they want to close. Sorry, that's not what I want to do. They want to close this bar on its high to get that measured move up, but it's also another bull flag. It's probably expanding triangle. Expanding triangles are also bull flags, right? We're kind of smack in the middle, so I still don't know what will happen. Bears are still trying to prevent that because they might be seeing some kind of complex head and shoulders, okay? Although I don't like the way it is, because this is too high. So this isn't really a head and shoulders to me. This is a really this is another, okay, possible expanding triangle. Expanding triangles are trading ranges, so you see the trading range here. As long as they stay above the 50% of that trading range or the apex of this triangle, they're going to try to become bullish and go back up, okay? So the same thing's happening on a micro level. All right, so the bar 4 closed higher than on its mid level. However, it didn't close very bullish. You do have 2 bars inside, okay? So you have now IOI set up. Bar 3 is I, bar 4 is O outside, and another inside bar, bar 5. So we're in a breakout mode now. So if we keep going up with this bar 5 to the high of bar 4, chances are we might actually finally break out. But if you start to come down here, we can also break down from here. So we now have a double bottom and a double top. This is balance. We're going to break out of this. When I see these balance zones, okay, I have a way of trading this, but it requires a bunch of fib measurements. I'm not going to teach you all that. So stick to the basics, okay? You got an IOI, you got a breakout mode. You're inside of this, what seems like a mother bar, okay? So until we break out, we could travel up and down in the range of bar 4. I am not going to do anything with this bar 5, not until it closes and shows me that it wants to break out or the next bar wants to break out. So there's nothing for me to trade here. Limit order machines are trying to sell that close, but the bar 4 is not a strong bull close, okay? So they're struggling to sell it. It's a doji in a way, okay? So it's still a breakout mode, and bulls are trying to get that breakout. So if they do actually break out, I'm going to measure that measured move target, which is 40.5525. But what if it doesn't go break out from the upside? It's trying. I mean, bulls kind of found support here, right? So but it could also come back down again. We're still in a tight trading range here. It's the opening trading range, but it's more bull bias than bear bias. So we need these bulls to keep pushing higher. Okay, so let's see if they can actually do that. Can actually do that. But because it's an inside bar, I do not trust it. Okay, so I'm going to get rid of this because I want to see the bars. See, what did I say? When you're stuck in a bar with a, big range like that, it's better not to trade inside that because it's a limit order market. You're stuck in some kind of trading range. Every bar is a trading range. Bigger the bar, bigger the micro trading range. Okay? So, and you're going to get up and down action, right? And that's what you're seeing. So just wait, be patient, get some coffee, sit around, read the blog, right? I'm going to read the blog real quickly that Brad actually wrote yesterday. The market is gapping up and the bulls are trying to get what to expect today, actually. A strong finish to a week. So that's what I said. At this moment, this is good for the bulls. However, it will be difficult for the bulls to get a third consecutive strong bull close on the daily chart. All right, so we do have a third bar right here. So the struggle here is to close that bar today way above that moving average and go actually test these highs, like I said. So that's what the struggle is. They want to get above it. They want to keep, the bar on its high, test these highs. But it may be difficult. It may not actually work. Maybe at the end of the day, we might end up coming down, but we'll see. So, and if bulls really wanted to, take this over, they can still do that. I'm going to show you guys a chart at the open when you gap up. Okay, there are 4 outcomes. One of them is gap up. We might end up coming down and making a wedge. 1, pull back. Okay. 1, pull back. 2, maybe pull back. So we might actually make that wedge. And if we come down closer to the EMA and keep that gap open, we could actually break out to the upside. So there's a double top here, bar 2 and bar 4, okay? And there's a neckline here, bar 4. There might be some sell stop orders underneath that bar, but it is not a good bar to sell. It is a bull close and it closed above its midpoint. So if I'm bear, I am not going to sell underneath this bar for sure. But if I'm a bear, if I pick the bear side, this is the first entry sell. Basically, I'm looking for a second entry sell. But even if I sell, I may not have too much space to go down because market wants to make a wedge and then go back up and swing it. Okay, so I'm going to read the rest of it. This makes me think that, well, these are Brad's notes. So this makes me think that the market will do something disappointing today and close at least below the midpoint of the day's range and possibly below the open of the day. So these are good hints, okay? Take your time and read it before 9:30 a.m. Bulls want a trend from the open. However, the odds favor a trading range open. Well, we have that right now. Traders should wait 6 to 12 bars before placing a trade. This will help traders avoid getting trapped on the open. True. And traders can also wait for a credible stop entry, such as double bottom or double top, wedge bottom, which we talked about. We might get that wedge bottom before we actually buy. So, lastly, today is Friday, so traders should be mindful that Fridays had the potential to have a strong breakout late in the day as traders fight over the weekly chart close. This means traders must be prepared for a surprise breakout late in the day and not to be in denial if one is already happening. So these are great notes. Now, what just happened here? We have a double bottom, higher low. Where is the wedge? Are they still trying to break out? They might be. So, but still, we're still in a trading range. So I want to see a breakout with this bar if they're going to break out. If they're not going to break out, then that's fine. Now we have a new double top. Okay, we have a failure to break down for bears. We have a failure to break up for bulls. Breakout mode is coming in. All right, so now look at it. IOI 345. Now we're getting a bull bar trying to have an attempt to break out. Now, good for the bulls, but they need to close that bar higher than bar 2's high, okay, with a body. Then you can measure that measured move. Okay, but right now we have, okay, so we are breaching that high. Good for the bulls. They're trying to get back up to here. There may be, bears still want that lower high, triple top, double top, higher high. Bears want that lower high. Remember, I said this could be a complex head and shoulders, okay, now. And this is part of the left shoulder, and we might get complex right shoulder and then swing it down. It is possible, but right now we're getting closer to the Globex side. That bar is big. That is an outside up bar. Look at it, okay, on the Globex, and limit order buyers were right there. They bought it, so this is going to go up now. So Globex high, maybe there's another wedge there. We're trying to break out of the Globex high. Good. If this bar closes like this, you got a measured move target. Okay? So that is that. So that IOI basically signaled you that we're going up. And that mother bar is now breaking out, and it's probably going to hit its targets. There might be some profit taken at the 40-45, but it's trying to break out furthermore. This is the target. This is where the bulls are trying to get to. But we need bulls not to fail here. They just failed. They failed on the Globex. They did not get above. So now what? Well, I did say there might be some kind of new wedge there, 1, 2, 3. But this is a big bar. It's still trying to break out. And I said on the hourly chart, we have targets up here. We're trying to get to that. Or even here on the daily, we're trying to get to that. So, all right, so we do have a breakout. Bulls moved the market about 15 points. Not necessarily 15, about 14 points here. They might take profit a little bit. Or the profit taken is going to be so weak and they're going to just keep going up to the 20 point. Measure from the, if you do actually measure from here, they're already at the 20 point, okay, from the low of bar 4. But that was a bear move. So either way, we're going up. So this is where they're trying to get to. But they need to close a bar above the Globex high to break out. Then we can continue to go up. Okay, so there you go. This is your breakout. So all you have to do is just to wait a little bit. So let me show you a, hold on. Okay. So, you know, we did not have wedge. Well, that's really a double bottom, but yeah, there's no wedge there. That's a double bottom. This was the wedge. So we didn't have that. So we do have a double bottom, and we didn't even have to stay in it too long, right? It was quite fast. So imagine this. So this is basically what we're having, right? The gap is open. We have targets and magnets up there. A bigger measured move target from yesterday. Now, we need continuation bars. If you want to see all of these hit, okay, you want to see continuation. That means a breakout bar needs to get another strong bull close, preferably with a tiny little wick or no wick up top. If this bar closes like that, that is a phenomenal continuation. It's going to get to here, okay? So basically, hello, that's not what we had. This is probably, and then I'm going to look for wedge tops, failure to break out. And then we'll see where this goes. I'll be looking at, once we get more information on the chart, you do not want to see huge upper wick. You want to see this body close almost as strong as bar 6, maybe even stronger or equal. Then we would get continuation. But 40.55 is your initial target. So there's some questions coming in. If buying above bar 3 or 10 immediately without waiting for a pullback is risky than selling below bar 31. Oh, you're talking about yesterday. Are you talking about yesterday? I mean, look, trading is risky, of course. I mean, every time you open a trade, you're having a risk, right? So if you're talking about this, you're at the lows, okay? So think about it this way, right? So you're at the 50%, almost the 50%, not really, but at a good pullback, not 50%, but I think maybe 66%. If I measure from that low to there, yeah, oh, actually, yes. You're at the 50%, okay, pullback. That's an average price. And the bears did not get continuation. So if you're smart and you measure ahead of time, and you see that no continuation for bar 1, bears are actually fizzling. So you can literally buy above this, but you're still buying in a limit order market. If you do put a buy order above a strong bear bar, I don't like buying above strong bear bars, but at this point I have a reason, and I'm anticipating this breakout, just like today, right? So your stop has to be somewhere here, nearby, and you're looking for a run. But it is obviously, risk is stops are very personal. Everybody's account is different. Now, can you handle wide stops? Can you handle stops that are more than 4 or 5 points? Now, those are the questions you have to ask yourself, right? So if you have a tiny little account, switch to micros and trade with that. You can handle the risk. But you can't, trade E-mini trying to jump in about something that you don't even know what it's doing. Now, here is different. Today's open is different than yesterday's open. We opened way up above, okay? Like if this was completely opposite, flip this chart upside down. Say we open down here, gapping down at some support or some kind of, really down. Do you think I'm going to want to sell that? No, because it's probably price is so low, I'm going to look for a pullback and then sell it. So today is no different, right? Completely opposite. So what do you see here? We gapped up and the bar 1 did not get continuation. There were sellers underneath bar 2. They actually scalped. I mean, look at how much they actually scalped, right? More than 6 points. But there were also buy orders underneath. Probably limit order buyers were underneath there, or maybe a 2 points below. Starting, let's see. Yep, almost 3 points, 2.5. So around 2 points, you start to get buyers, right? Because the initial move is very bullish. So the limit order buyers are waiting to get a pullback and buy. So either way, you buy it and it comes down, you're going to have a wide stop, right? If you put your stop here, you're done. So you're out. Maybe it's better to wait, and this is why I wait. I don't mind waiting. Once I see the bar 1 and 2, no continuation for bulls, and it's most of the bars are overlapping the bodies, I'm going to wait even more. I'm going to wait for a double bottom. I'm going to wait for a double top. I'm going to wait for something. And there we have. We are about to get that target. We have a good breakout. We are now trying to reach up here. Okay, so market is pushing. This is where they're trying to come up to. So 62.50. Yep, around 62.50 is right here where the liquidity begins. And above that is a larger measured move target. So good for bulls, but market could make, by the time it gets up here, okay, I'm going to be looking for wedge formations. Okay, so this is going to come down. I'm going to look to buy again possibly, but then that would be the first wedge that maybe we go finally maybe into some kind of trading range and we could end up selling. That could happen. You saw an example there. Or we're just going to go up and up and up and up. And then finally, after 20 bar gap, we're going to come down to EMA. And the first touch the EMA, it's going to buy. Or maybe it's going to buy underneath the EMA. And we're going to end up closing the day bullish possibly. So there's that possibility. So we'll see. Now, if we start to close strong bear bars after maybe, wedge tops, we finally come down to the EMA. But before we come down to EMA, I'm going to look for bars like this. See if the market is going to start making some kind of bear flags at and above the EMA. Because then, remember, price action repeats itself, right? So we have a similar thing to today, but it started below the EMA, okay? So that kind of lowered the probability of day being really, really bullish. It ended up trying to resume the bullishness, but that was too late in the day because that's big up, big down due to being down here. Now, we might have the same thing. In fact, we could have this. So this is the EMA. Came down. We go up again. We go up again, but it fizzles. Then I'm going to look for big bear bars, okay? Coming down, bouncing. But if I see a big bar, I'm going to look for another bar closing underneath the EMA. That could end up selling. And we could start to come down all the way below the open, bar one open, and maybe get a measured move to down. You see this area where we broke out yesterday, this area? This is important balance zone. Market was very happy yesterday. Now, if you go back to Discord, and if you go back to ES Analysis read-only chart, open up some of the charts that Brad actually posted. He talks about how happy the price is there. Okay, so he's hinting at you that we might end up coming back there once again. That 4,000 proven to be, okay, a magnet. Truly, market is very happy testing it. I mean, you could see it on the daily chart, right? He even posted. It's also on the recap. So open up the recap video. It's on the first 10 minutes. He's explaining, okay, why market loves, okay, around this area. You could kind of see it, right? It's an attractor. What is an attractor price line? Market price likes to keep coming there, hangs out there. It's balanced. So institutions love that price. And we could end up coming back to that. So, but really, first, I think the bulls really want to test here and get that double top before coming down. It is possible. Now, what if they break out? What if this becomes a huge bull day? That means they want to go and test this. But we're already at the 40.50. So 40.50, we're trying to get up to this day's low, which is 41.10. So can we get a 60 point? It's nothing. We could, but again, something has to be a catalyst for us to keep going up and up and up. Test here, breakout test. It's also, look what it is. Look, this is support turn resistance. And we get there, we're going to sell. So maybe that's what the market is trying to reach there. I'm going to mark it. Although all of these markers are going to be gone, so over the weekend I have to redo my charts for the new contract. I'm still on the old contract, guys, because it's 556K versus I'm sorry. Oh no, it's actually equaling. It's almost equal. It's leveling. So I might actually I might switch soon. Like maybe in half an hour, I'm going to switch to the new contract. Okay. Okay. So we've gotten very, very close to the target, but we did not test it. Now, what is wrong with that? Well, I did say that we made a big push. That's good enough for me. I mean, you should have taken profit, right? So 54.25, 55.25, that's a 1 point front running the profit taking. So I said this many, many times. You know, don't expect 100%. We're really extended above the EMA and way above the yesterday's high. And if you're not so sure, look left. What's there that might be causing, okay, that 54.25? Let's take a look. That balance zone, right? So see that right there? See that right smack in the middle? That is right there, especially here, 53.25, so, or maybe right here. So we're in this balance zone, but really, you know, you needed to take profit. Market sold with 2 legs, 1, 2, 3 bear bars, and pull back another leg. So that means there's some impulsive selling began. And this is the bar, 69. Now, bar 69, look at the body, right? Nothing has breached the body. Nothing has overlapped with the body coming from down right after this breakout happened. So if I actually put a line there, look, right there I'm going to put it. Now let's take a look. Let's go back to the today's price action. Now we have an overlap. So this is all mitigated. Look, why do you think that they start to take profit 1 point before the 40.55? Because of that bar. You learned about this 2 days ago. So now we know, but if you didn't leave your position, they're probably coming to get it. But I see that, I marked that, I'm probably out. But that was only a 1 point. So if you stayed, good for you. That was a pullback and buy again. Now I'm going to get rid of this. Now we have a bigger target for continuation. Here is liquidity. We're going to test above this line most likely. Going to get rid of this. We are now finally making the third push. Okay. So I'd like to see bulls to push this further up and not close this bar bearish. But why do you get this upper wick? Well, the second objective met. Now, you can also go back to that bar again. Instead of just the way that I mark the first area, mark the whole body or mark the whole thing. But I'm going to mark only the body. Okay. That. Or you can mark from there to there, the high. So now go back. Look, they tested it and it's coming down. So there's so many different ways to find your targets. But if you did go for the measured move, you already got it. So you need to take profit right in there. Okay, so you know now why we're getting that bear body and an upper wick. 2 reasons why. Now, are you disappointed? Because we have leftover targets that we found. I'm not disappointed. Price will do what it does, okay? They're always looking for these objectives. So if something is taking profit and that bar closes like that, maybe it's best to get out. Because you don't want this to collapse and make a maybe 2-legged move down before going back up again. Then you would give back most of your, your profits. Well, we do have a 3 push top, so that's basically 1 pullback, 2 pullback, and then we go back up. But I don't think it's accurate. But it is. Okay, so some machines will see that as a triple top, but I don't think. I think we might end up going up more, but we'll see. I don't like the way the bar 10 closed, so we now have another IOI, but the bar 11 hasn't closed, so I can't really count it as I, but it is an inside bar at the moment. So we're going to break out again, and that tells me if this bar closes bullish, we're going to keep going up and possibly make a better third push and maybe an overshoot. I don't know if bulls want to chase this further up. Looks like they want to. They're going to have to close this bar really strong. Now, could this be a, what's happening here? Let's talk about it. So those who bought here, disappointed, broke even. Now they're looking to see if they can actually continue to push. If this bar closes bearish, bears are looking for a second entry short. Okay, so below bar 8 with bar 9 is your first entry, but then those who actually sold got kicked out. So they're disappointed too. Everybody who sold is disappointed. But basically all these bulls bought this close, were able to get out. Now, if they see this bar close on its low, more will get out most likely. But well, let's see how bar 11 closes. You see, bar 10 is another, outside up bar or outside bar, right? So that makes it a mother bar. We're still stuck inside its range. We did not break out yet. If this bar actually closes below, then, that's not a mother bar. So as is, it's a mother bar. But it's probably going to go beyond that. So there you go. So they're trying to make a new low, but this is also a pullback for bulls. It's just that these bulls are now taking profits and they're wanting to buy again. They made a new high here. They just want to see the pullback fail, and then they can buy, maybe if it's a bull bar, one tick above that, and then continue to go back higher to these levels. But we have now 4 bars overlapping with also breakout continuation bar 7. Small limit order market. There might be limit order buyers somewhere down here. Right around there. So if we do pull back down there, most likely buyers are waiting. Is this a good enough wedge? So you may want to ask yourself that, is this good enough to sell? Well, they didn't sell well, right? So bar 9, 10, it's alternating bars, and neither of them closed strongly bearish. So everybody's looking at bar 11 to see if this is going to be the second entry short. Technically it is, because it moved below bar 10, but it just needs to close really strongly bearish in order to keep selling this down, at least somewhere above bar 6 where the buyers are waiting, limit order buyers are waiting. Okay, there you have it. That's the second entry activated because the bar 11 closed really nicely, but as it gets closer to this level, their buy orders are stacked, I said, right? So it's a breakout test area also. Now, I think I'm going to finally switch to the new contract. Things are going to get a little bit iffy because I'm going to be losing my, especially on the Globex chart and here, and that's not good. Okay, so I'm going to switch now. I want to see bulls actually use this two-legged move in a way and then trap the bears trying to sell and then buy and go up again. So I'm just watching to see if we can just do that. Limit order buyers showed up even earlier. It's also down on this, up on this, down on this, up on this. So there's a micro wedge there, as you can see. So bulls are trying to get a bull flag. We also have a gap here. Okay, see that gap? That's ideal for bulls to keep pushing this higher and get a better wedge. So we're probably going to try to get up here, seems like. So that's why I was saying, is this an ideal wedge? I don't think it is. I think we need to push another leg up. So I like to see bulls push this further higher. We need to close above this area. I'm going to get rid of that now. They're trying to chase this further up to about 64, I think, like 40, 64. Not really 64. Yeah, around there. 62. They're trying to chase this up to 40, 62 area. 60, 40, 60, and 40, 62. But they need to close this bar now. Bullish. Bears want a double top, but I don't think they will get it. We should get up here. ATR is about 8 1/4. So if we do get a bar closes bullish, I'm going to add that ATR value to where that body closed. That's a good close. So it's also, I would say from this high, it would be high 1. Let's see if we can actually push this further. Bears want a double top, but bar 12 is an outside up bar. The only problem with it is that you're in a tight trading range, so it's trying to break out. And what the machine sees, they see some kind of trading range there, and bar 12 is kind of testing that. So some of the machines are trying to prevent that breakout. But I'd like to see this get continuation after this pullback. If this bar closes bullish, it's probably going to go up. I'm looking for, now I'm no longer expecting 62. I'm thinking maybe 60 area, 40, 60 area. But I need this bar to close bullish. See, it's a trading range that is scaring some of the buyers. But as soon as this bar closes bullish, we're probably going to push a little bit harder, further up. So possibly 40, 60, 40, 61, depending on the ATR is now 7 1/4. That bar closed, bar 12 closed around, where did it close? 53. So add a 7 points on it. Math comes up to 40, 60. So I'm thinking we might test 40, 60. If they can get it together. All right. That looks promising. Let's hope that we won't make a double top with that bar 10 high. I do have a target starting here, target zone from here to 68.75, or this wedge line. Okay. Let's see if we can push somewhere around 40, 58, 50. There might be danger. So as early as 58.50, if you want to take profit, be my guest, because that double top is problematic, the possible double top. Okay? Come on, bulls. Keep pushing. I'd like to see 40, 60 tested. So we might overshoot the 58.50 a little bit. I was going to switch, but I didn't switch yet to the new contract. Come on, bulls. Keep chasing, keep chasing. Keep chasing. All right, double top is problematic, like I said, at 58. I think 58, even 58.25, you may want to pay yourself and maybe leave a runner into this area. It's slowing down. See, it's got no urgency to go up, you know, if it's gonna break out. So all right, so we have two bars, strength bars. They're nice. I like the closes, so we should get continuation into possibly 59, but I'm still wary of that possible double top, but we should overshoot it. Come on, bulls, get going. I'm just gonna take some money off the table here. I don't like that double top. Could this be already a wedge? Don't think so. The bar hasn't closed. I think we're gonna keep pushing. It's that double top is scaring. And you see that 15-minute bar did not really close up here. It's getting very weaky, but we should get that. We should get at least a 59, if not 60. So, yeah. Keep going. Come on, bulls. Close that bar. Another third bar. And breach that double top and keep pushing higher. Some will start to take profit around 58.25, 58.50. So be aware of that. Okay, so I'm going to scalp there. We're closer to the target 40.60 anyway. Double top. Just one more push. There's a much better sell above somewhere around 40.60, 40.61 to maybe even right around here. I really would like to see we tap in this area before coming down. But that double top. So we did not breach. We didn't even test it completely. We tested one tick below that bar 10 high. And I did warn you that we're going to be getting some hiccups there. But we should breach it and make that third push. So I don't want to see a bear bar closing on its low here. It's unnecessary. We have good bars. It's high 2. Well, if you count from here, it's kind of high 1, but then we have another breakout bar. But if you count from here, that's high 2, so that's nice. All right, good. Now all we have to do is just reach out and grab it, 59 or 60. Then I'm gonna look for bear bars. If I say 100 times, maybe they hear me. By the way, today is myself and Brad, so I'm going to end my webinar around noon, but leave your webinar open, which I'm going to leave mine open because I'm going to end mine, but Brad is going to come in and out. So during the afternoon, he'll come in and he will stream. So we're going to leave the webinar open for him. And okay, so we're going to have him in the afternoon, maybe even starting right at noon. He might just come in and say something and then go and then come back again. So All right, I'm still 40.59. I still want to scalp that. If I can get extension, but it's just not, it's hesitating. This breakout shouldn't be this difficult. All right, we just tested fully the double top, so we have a perfect double top here. Bulls need to breach this, get to 59. All right, I did scalp right here, 58.50. It's trying to get, okay, we just got the 60. Good job, bulls. Now we have a wedge in a way, but I'm going to leave it there like that. Very nice. But I think you may want to get ready for these bulls to maybe take some profit, maybe up here. Okay, Globex high, beautiful breakout. Good for the bulls, but look where we're also getting to on my, the reason why I didn't switch yet to the new contract, it's because I wanted to see this through and I just didn't want to rechart everything. So here we have, I mean, it's just still the old contract is still higher, so you can still stay in your old contract. 40.64 is still target. Good for the bulls. This where I marked is what I'm interested in. That's where the liquidity begins. And above, we might test. Good job. So hopefully you guys are making some money here. Yep, high of last week is right there. Globex target is right there in front of you. That's basically Asia 1 to 3 to 1. Asia got their 3 to 1 bull target. And last week's high is still magnet. And we just, look at that. We just tested that liquidity. That's great, but there's still enough room there. Here is what I'm interested, okay? I did say that we're trying to get up to the high of whatever this day is. 30, August 30. Yeah, 71.50. Can we push there? Well, that's what they're trying to do. 71.50 is where the bulls are trying to push. Although, I mean, things varies if you're not moving your mouse on the right place. So I'll get that target. 72.50 apparently. 72.75 to be exact. And that is where the bulls are trying to reach. And we already knew that. We talked about it, right, at the open. So even Brad said that, you know, we're probably going to be bullish. Beautiful. Now let's take a look at that chart again. What's up with that? Oh, here we go. We are pushing higher, so, but I think eventually we're going to come down. Okay. And this is what I'm worried about. So we have tapped into the liquidity zone. If you didn't take profit, you needed to take profit a little bit at least. Now, measured move target is up above. 64 is last week's high. All right, so now we're in the sell zone. Can we push further more up? I mean, the bar is really nice to close, but look, it could not close the body above that green line. We might continue to go up because, like I said, this whole area is a liquidity and we may not be done yet. In fact, we could just overshoot a little bit. If we don't, some machines will see second push is the overshoot and we have already made the third push. But we're only 6 3/4, okay, points away from the measured move target from yesterday's range. This one. So we could continue to push. We might actually test 64.25 and then come down. But I'm flat right now. I'm not in this move. But good for the bulls. There's another yeah, I'm just not going to add new targets, so you kind of know what's happening here. 72.75 is the extended target. The bulls really want to get there, maybe before getting a double top. And that will be somewhere around here, maybe. We may not reach it. If we cannot reach it, we still can't make a double top somewhere here. But I'm flat. I said this is going to pull back a little bit. But after this pullback, bulls might be able to continue again, perhaps. But I'm going to wait and see what happens here, because this is a sell zone and it can sell. Why is it a sell zone? Well, it's a liquidity area. The institutions are trying to grab some liquidity, and maybe so that they can actually create some strong bear bars. Right, yeah. The weekly, we already talked about it pre-market, that bulls are trying to get that outside up bar for this week. So that's kind of a, same thing with that high. They need to go test maybe 72.75 and further up. And this EMA I said is magnet on the weekly. So can they keep pushing this higher and higher? Sure they can. So we're going parallel to the EMA. Okay, so this is basically what we're having, but it's not as climactic or aggressive. Look at these big bull bar, but it didn't really get continuation. So it came down, another bull flag, and it's keep going and going and going. So ours is a lot more steady. And even though we don't have a bar like this, we still maintain the gap between the bar 2 high and the bar 12 low. Okay, so we do have a gap here. Now we don't have a gap there, maybe a negative gap, but we're pushing higher. So we're in a bull trend, and it's actually a small pullback bull trend. Why? Because look at the pullback bars. You got only 2 bear bars and a bull bar. Even the pullback bar in bar 4 was bullish. Now, this right here is very weak pullback. So next one could be even weaker, and we could continue to go up. So the 68.75 is still target. Okay. We don't have this climactic breakout, but we have a nice steady bull channel. I'm just right now looking for this wedge. So wedge, overshoot, double top, higher high, and you got the head and shoulders. And then you see that big bear bar. If we get something like that, I'm going to look for bulls to fail with bunch of bars, and I'm going to look for a bear flag, and then maybe sell all the way down to the here. But I doubt this is what we're going to have today. We're not going to have this. We're very steady. We're keep going. So now we're losing some momentum. I did say that if we continue to go up, we're probably going to test the 64.25, and we just tested it. So 64.25. If there are no sellers here, that means bull bars need to close above 63.40, 63, and continue to go up. Continue to go up to 65.50 area, okay, or maybe even 66. Then I would look for a pullback and use the 63 area support. But this is still a sell zone, and we just accomplished a another 20-point move if you actually measure from the bottom of bar 12, okay, from that pivot level, just about 20. We just tag the low of that zone. So this is why I said, you know, this is still a sell zone, at least a take profit zone. So these bulls are taking profit. Now, in order for them to keep going up and up to 40, 68, 40, 72, even furthermore up, they need to close a bull bar above 63 and go up and test the 66. Right now they're taking profits. I said I was flat. I'm still flat. I'm going to look to see what the bulls are going to do here after this profit taking. If they manage to meet the criteria I just talked about, close a strong bull bar or a couple of bull bars above 63 towards the 66 area, then we're going to continue to go up the 47 to 273 area. So, yeah, don't panic just yet. It's still trying to push. Well, I talked about it's being a sell zone. It's because if you guys are just arriving, then you're missing. I did it twice, actually. Talked about this here. Look, it's a double top there. It's a liquidity area, equal highs, right? So liquidity zone. And right here, I also marked it, which I removed later on. Market sold here. You see this area? It's a balance zone, right? So, but this is the area that I marked, and I said we're going to test it. Now, market sold here twice, and then sold here even more. It's gotten very serious about selling. So I said this is the area that I marked, and I said somewhere inside that bar 69, we're going to test it, maybe even above, but that makes it a resistance because it was resistance before. Now, if you are still in your long, market is still making new highs. What you can do is you're still in a swing here. So what you can do is you wait for pullback bars. You do not want to see those pullback bars breach these lows, okay? And if the pullback bars actually slow down and we get another, you know, good high bull close, then yes, we're going to keep moving up. But look also what's happening here. There's a wedge formed, okay? So, and if you actually put a line here, this is your trend line. We're going to test that trend line, and the bears probably want to close a bar below it. But if they do close, they might also buy that because that's the third touch, okay? But it's a wedge, all right? So they're trying to close a bar here. Now, after the wedges, you do want to see another test of highs before selling, right? So you want to see a double top, maybe a double top lower high, double top higher high for a major trend reversal. So if you're trying to sell here with this bar, you may not go too far because first you need to see a breakdown of this trend line. This is profit taking, so I warned you about this being a sell zone for many reasons. I mean, it's all in front of you. I said this is a target, they're going to take profit. Do you see bull bars closing above this? No. Look at this. We met the target last week's high to the tick. So all these objectives are met. Now, if bulls want to continue, that's fine. But there's always that profit taking when an objective meets. So that's when I look for a sell zone. Or when I say sell zone, like some, you know, legit reason to get out of the market or go flat or take money off the table and maybe leave a runner and that runner may not run, that's fine. So that's the reason. And plus the Feds are talking. We've moved enough here for bulls to pay themselves. It's still very bullish. The pullback will probably going to buy again. There it is. See that trend line? It breached, but it hasn't closed the bear bar yet, and it's trying to bounce. Sometimes people like to sell. They see a bear bar and they say, oh, bar 17. It must be a great, sell signal bar. It may be, but it needs follow-through bar. Now, we are in bar 18, all right, bar 18 range. So now, if we start to get really strong bear closes after bar 18, we might have a reason to even sell more. So that's another reason, bar 18. But for bulls, I'm not giving up on the bulls yet. Bulls need to start, buying again and go above the bar 17 high, close a bull bar around 66 and above, then I'll buy. And I'll probably hold it up until 70, 72. But to make that 6-7 points or maybe even 10 points, first you got to be patient and wait for these bulls to show you that they're not done yet. Okay. So we have a gap open. I'm going to get rid of this. We have a measured move target. Bulls are still keeping the gap open, and good for them. Can this day be like this? Yes. Gapped up, double bottom. A lot more clear actually than this because we have gaps that are open. You got negative gaps here, but our gaps are even a lot more defined. So we're still in a small pullback bull trend. We're still pushing. Okay. So can we have this today? Well, today's Friday. It's possible. It's nice and steady trend. I don't have a reason to sell. I did, but it ended up, look what it did. Bar 18, bull bar. It did sell, but that's all it did. And I did say that if that trend line is not breached with a strong bear bar, even if it did, close the bear bar underneath, chances are we're going to go and test the high. So now you have this trend line. All right, so, and we have not breached that trend line. We're still buying that third touch. So my criteria, again, bulls to start printing bull bars above 40.63, go all the way to 66. So they're still pushing. All right, so you can see that, right? This is still a small pullback bull trend. Limit order buyers are buying underneath this pullback bars or buying at the prior highs. This is part of your BTC course, okay? And they bought it, but the bars are very weak. Now, what's happening here? Well, this line that I put in here, we can't seem to go above it with consecutive bull bar closes. Now, bar 18 is a bull bar, but I need continuation. I need a bull bar closing like that. Then we have another breakout, and we may have seen the low of day, but then we could continue to go up and up. But first, we need to get above it. See, it's still a sell zone. Where is the bull bar closing above 40.63? That was always my criteria. I need to see that bull bar to use this area as a support. So they're trying to get a second sell now. First sell was bar 18, breaching below that. So now those who actually might have sold instead of buying are trying to make a 5-point. Can this fail here? Well, look what you got here. 1, 2, 3 push and a lower high double top. Bulls are trying to get a now major trend reversal. But I don't know. I'm not really interested yet. Now, the bears are trying to sell. But where is the strong sell signal bar? So I don't see bulls doing what I wanted them to do to continue up. I wanted to buy, but I didn't see that happening. Now, these bulls who bought this bar and that bar kind of broke even with bar 18, and now they're disappointed the bar 18 breakout is not happening, at least not yet. So some of them might be giving up and expecting this bar 19 to close on its low, and then it could sell again, right? So that means bulls might be actually giving up, and giving up meaning taking faster profits and getting out of the market. But I did say that this is a liquidity area. Institution needs to test it to grab that liquidity, create some kind of frenzy. So I don't know what they're planning to do. Nobody knows, right? Only they know. All I know is that there's a wedge and there's a double top lower high. This is a slightly lower bar 19 high, is lower than the prior high, 17 high. So if this is good enough for institutions and they're trying to create this frenzy, they could sell. But there's still buyers here, okay? 2 bars, 3 bars, there was a breakout. There might be buyers here underneath 14. But that bar now becoming very strong. I'm going to wait for it. It's the second sell, okay? If it closes like this, it's probably going to get continuation, at least a leg down. But bulls still want to keep this gap open, and they want to trap the bears who are selling, trying to sell this small pullback bull trend. So this is a critical area. I am still flat, and I don't mind being flat until I clearly see the signal bars or the trigger bars. Okay, so now we have a bar that closed on its mid-level, bar 19. But look where the body closed. Do you think that's a good reason to sell? Do you think that's a good second sell signal? I'm not interested now because it's a tight trading range now with bar 15, 16, 17, 18, 19, and 20. I don't like the way that bar closed. They should have closed that bar 19 body a lot lower, at least at the same level with bar 18. If they do sell this, fine, sell, but I'm not interested. Can the bears get a 2-legged move down to EMA? They could, but I need to see this bar close bearish. 18 bar could be a reversal or continuation breakout. So the market is deciding here, I think. I don't know. I don't want to sell this. It may come down and make a micro double bottom with bar 19 low before going back up again. Now, if we do get that bottom wick filled with a bear body, bar 19 wick, lower wick, and bar 20 body actually completely fills that wick, then yes, then we're going to have probably an attempt to get to the EMA. Maybe 10 bars, 2 legs, but there are limit order buyers are waiting here, here. So bulls are still trying to keep this gap open. It could be too premature to look to sell with 2 legs into the EMA because we could suddenly turn around and go back up again. So I'm not really keen on selling. I'm going to wait for this bar 20 to close at least. It's disappointing that bar 19 did not close bearish enough. But we have a micro double top, or double top, I should say. That's not really a micro double top. It's a solid double top with 17 high and 19 high. Bears need the second continuation bear bar to continue down. There was a breakout here and a strong 2-bar combo, so the limit order buyers were there. That's why the bar 19 bounced. So limit orders were here. Now, they're still trying to close a decent bar to continue to sell, but then you're selling into this. So if you do sell, at least grab a point and just make sure you don't get stuck in something that turns around. Those who sold underneath bar 17 already made 475, but not complete 5-point, which is down here. So bears might be wanting that 5-point, and that's what they're pushing for. Okay, that is a good close. That's continuation, bearish pressure, but we kind of know why that's happening. Okay, so say they sold underneath at the 50. That is right there is the 5-point scalp they're coming for. But all of this, look at this, close and open, close and open. Limit orders are sitting here. So I did not sell this because there's that potential of going back up again. They're coming to get that 5-point. Now, if this bar closes really bearish, then you have 3 bear bars. That's good momentum, right? So can we go sideways and have another leg down? It's possible. All right, so they did make 5 points and a little bit further down, a lot more than 5 points, but, or you could say, well, what if I sold here to close? There's your 5-point, the second entry. It's got a lower wick. So when I see second entry bars like this, and if I'm really inclined to sell it, I'm probably going to sell, try to sell it to close. Anytime I see a wick like this, I don't like to sell one tick under. That's just a waste of points. Okay, so you know it's going to go up. But if the wick was smaller, like I said, if this bar 19 were to close down here, I wouldn't mind selling that with market or like that and look for a 5-point maybe. But that didn't happen. I could have sold it. I didn't sell it. I would have made money, so I just didn't want to risk it. Now, can we go back up now? Well, I'll wait to see how this bar closes. Depending on how bar 21 closes, if the bears cannot get 3 strong bear bars, they may not be able to get down to the EMA. Now, what if bears, like I showed you guys earlier, end up actually coming down pretty fast? Remember what I was looking for? If we end up coming down pretty fast and close that bull gap, I'm going to look for bull bars, and then I'm going to look for a bear flag. Okay, so that's also a possibility. I showed you guys an example. But right now, limit order buyers are here. And we're getting a double bottom with bar 14 and its exact area. Okay, so bulls are still trying to prevent this gap from closing and maybe go back up and make a much better double top and then get a major trend reversal. That one I would be interested selling. So right now, I still have to give bulls the benefit of the doubt and potential gap open remaining or intact. So, okay, so where's the third bull bar now? It's not there. So bears are not that strong at all. Unless they sell now and get that second leg down. Now here's a leg 1, pull back. We might get a leg 2 still. But look what's happening here. What is the bar that encapsulates an inside bar? Bar 19. Bar 20 was the inside bar, right? So you also got an IOI, right? And breakout faded. There's no breakout at all. That's a fake breakout. So now what's happening? Bulls trapped the bears who were trying to sell with a second leg. So this was the pullback, and that became the second leg. So now, if they can close this bar bullish above 59.50s, okay, we're going to go test the 40.61, and most likely we might end up testing 40.63 again. That's when I'm going to look for another bull breakout. See if they can do it. So the bulls need to close this bar above 59.50 to become bullish yet again. Why? Because that's the midpoint of the outside up bar or outside down bar, in this case bar 19. The bar that engulfing this inside bar. Now, if the bears are going to break down, then they're going to have to show me a strong bear bar taking out the low of bar 19. Since I don't see that happening right now, I can't really sell it and hope that the price goes down to, again, to 40.53 and then continuation down to 40.50, then down to 40.45. It can, but I need to see a strong bear bar. All right, so I don't have a bull close above the midpoint of bar 19. I don't have a bear close below the low of or the range of bar 19. So I'm going to sit on my hands and I'm going to wait for criteria to meet or the conditions to be ideal. Because for bears, they want to close a bar underneath this blue line and they want to come down here. That's their target, 40.50 and a further down to EMA. They can come down here and bulls can still keep that gap open. So this is where they're trying to go. But I need that bear body completely closing a bar underneath bar 19, which is right there. We're right there. So they need to close this body in 1 minute and 30 seconds or whatever. First here, at least. They might come down here so quickly before the bar close, then I would look for a continuation down here. But I don't have that right now, so this is the second leg now. So the bears are putting a second leg down. Can the bears be trapped here? It's possible that they could. Like I said, we need that bear body closing below this line, okay? Then we go to the 40.50. We do have one, the breaching, so we should continue to go down. See if we can actually reach that target. Yes, there's a 20 bar gap. So there are probably buyers waiting at the EMA. Okay, so they did close the body, bearish. Now, will they get continuation? They should be able to get that 40.50 quickly. Shouldn't be a problem, but. EMA is target, and there are probably buyers waiting there. So we could continue to come down before we're bouncing. It's a beautiful pullback and sell. So I'm going to try to scalp there and see if I can get it. I'm one tick above that 40.50. I sold it. $40.25, I got it. 40.50 is right there. Come on, 40.50. It's almost there, I'm sorry. It's just, it tickles me, you know, it just comes down. Oh my goodness. 1 tick before the target. This is why I grabbed the 25. 50.25 was my exit. I'm like, I'm out. I try to do that 1 tick front running. Sometimes it just gives me a tickle, you know. You expect that. It's because I expected this to happen. It's just, this happened so many times this day. You know, bulls are trying to keep that gap open, but you know this is going to happen. So instead of trying to get the 100% targets, okay, where's that? So I'm going to take that. Just take profit 1 tick above, maybe even 2 ticks above. Okay. So can it come down further? Sure, it could. It still has 2 minutes and 18 seconds in this bar, but I doubt it. I think it just trapped everybody with the second leg down because bulls are still trying to keep this gap open. Now, since there's still time, can they sell this? Sure. They could still come down, but there might be some buyers still waiting at the EMA. Okay, so your stop is above 22. But you do have a wedge here. Down on this, up on this. Or you could say down on this, up on this, down, up, down. So we do have a wedge here, okay? And we're going to bounce. I don't know if they're going to come down and touch the EMA. All I know is the bulls are still trying to keep that gap open. But we are so close. I'm flat again. I just didn't want to deal with this back and forth nonsense. Because look at bar 22. Look where it closed. Bar 22, which I sold, but bar 22 did not close all the way down, right? But it's still beautiful bar, beautiful pullback, but the market is not bearish. So when the market is not bearish, you get this, okay, so you got a bear leg and you're looking for a pullback. Yes, you got the pullback. Good close. Sell. You got a nice scalp there, maybe several points. But you know there are buyers waiting. I warned you about those buyers. Yeah, market has been making gaps, right? So there's a gap from there to there, there to there, or if you're not so sure, go back to the line close. Look, from there to there, 20 and 8. There's a gap. Here, there's a gap, obviously. So the bulls are still in charge. That's why, call me chicken, but I don't care. Money is in the bank. I made money. That's all that matters. All right, so I traded 3 times, and see if I can hang on. I don't want you guys to see my account number. I'm just going to leave the initial. So I am trading what I call, but I'm chicken. Now call me, why am I chicken? Well, it's because I'm talking, it's very difficult, okay, to trade, but I only traded 3 times and only with single contract. That's all I did. And that's all I did. And here, let me show you. So you know that I only traded with 3 times. Okay. But it's still a good income. You know, this is going to be a lot more than that once, you know, I'm done. I'm going to be trading this afternoon and Brad is coming. So I'm going to be trading with his commentary as well. As long as I'm green, that's all that matters. Now, if I wasn't talking, if I weren't, you know, on my own, I would have been swinging this possibly. I would have my full attention. And that would have been already be $1,000 probably. So just want you guys to see that I am trading. All right. All right, so let's see. All right, so the gap is still open. We do have a wedge there. Bulls are still trying to go back up. It's still a bullish day. Now, we don't have small bars. We're getting a bigger bars. And I don't have a reason for a good bear flag set up here. So let's see how this bar closes. It's trying to get back up to the highs and break out above the highs and keep going. But there's a potential of getting a double top. Or we're just going to keep going up and up and up the rest of the day. Okay. We could, it would go up perhaps, and then finally we would come down. Then I would look for, okay, another bounce there. That bounce I would definitely buy. And that could happen around is maybe bar 38 to 40, but I don't know yet. So right now we still have a 20 plus bar gap open. And before even it touched the EMA, bulls started to come in early. So now we're back inside the bar 19's range again. I don't have a bar, outside bar. So what I'm looking for is now a possible breakout from the high of bar 19. Mark the 50%. So the 50% of is right around there, I'd say, right? 59.50. Yeah, so I need to see bull bars closing above that 59.50 and then go, once we have one or two bars, I would want the bulls to test here and break out. But this is the criteria first. I need bulls to not fail and sell. I need bulls to close above 59.50. Then I have a potential breakout points up here. We do have a measured move target still. But what if this bar actually closes bearish? Well, I don't know. It hasn't done anything yet. It's still going, and it seems to be bullish. So those of you actually bought one tick above bar 23 are going long in hopes of closing a bar above 59.50 and testing the bar 19's high. Market is bullish. I mean, it's set up as bullish. It's looking for possibly another breakout, I'd say. But I need to see that 59.50 breached with a bull bar before I do that. Now, could this be a bear flag above the EMA? I don't know. Where is the spike? So in order to have a good bear flag, you need a strong bear body, right? Where is that? I don't see it. So I'm hesitating becoming bearish in this market. It's still bullish. We're making new highs and we're not making new lows. Now, if you're still not sure, at least the number one reason to be bullish and buy above these bars or buy after wedges or double bottoms, we're making new highs. And we are not taking out these lows. Structural lows are intact. Okay? If we do get a bar that takes that low, then that's a problem. But still, there could be buyers underneath the EMA wanting to buy low and go back up. So it's still not a good enough reason for me to become bearish. If this is a bear flag, it really is a bad bear flag. I don't like it. It's a little bit, bears are trying to put a case on the ETA chart better because they're right around the EMA. If you look at your ETA chart, and you might say that this is actually a bear flag, but still, I'm just not going to sell this. Not interested in selling. I'm interested in buying. And I want to see a breakout. And in fact, the breakout is going to be, breakout targets are 4066 and 69.25 to continue for bulls. So we're going to probably get there. And furthermore, 40, yeah, I'll just leave it there. Okay, so if we close above 40.59.50, I want to see bulls get serious and stop playing and start trading. Okay, so there you go. But there's potential double top also, be careful. We're coming back to that liquidity zone one more time. Bears still want a wedge, double top, lower high, major trend reversal, and they want to sell with maybe a couple of hours. Come back and test the open of the day tick price and create a trading range, possibly. Or maybe even sell for the rest of the day and swing it down all the way down to 40.1875. But we don't know that yet, right? So, but look what happened. We just tested that midpoint, 59.50. Still no bull bars above it. After this wedge, so you have a high one, or you could say this is the high one and this is the high two, or high one, high two, high three, but none of them is going up there. So again, my criteria hasn't met. Is this good enough lower high, or maybe head and shoulders pattern forming that I might be missing? Well, let's take a look. There's one right there, there's one right there, and that's the head. And here's the left shoulder, here's the head, and here's the right shoulder. So, I don't know. The gap is still open. If bull bars, now my other criteria, this is the left shoulder. The highest point of left shoulder is this. If the bulls start to print bull bars above it, then the head and shoulder pattern is no longer valid. But now we have, or we might have, a head and shoulders pattern. So here, okay, that's your neckline. There's going to have to break this neckline with a strong bear body to sell. I'm not interested. I need to see that first. So I'm still bullish, but bulls need to close a bull bar 58, 40, 58 to invalidate this possible head and shoulders pattern. Could have been this, the third touch and go. See why I'm still bullish? Still not wanting to sell anything? Because I can kind of see what the bulls are trying to do there. So as soon as they print that first bull bar above 58 and they breach above 59.50, this head and shoulders is invalidated, and we're going to keep going up to these levels. But they're for sure struggling. There's no urgency to, go long fast. So there's the struggle still. So I'm watching it for both sides. If market makes a decision, I will go with that decision, but they haven't made a decision yet. This is a limit order market now, so you can see it in front of you. I don't have to say anything, right? So they're selling above bull bars, and they were buying below bear bars. So it's still going sideways. It will make a decision eventually. I'm showing you why this is happening. So you could just wait. Or you could just scalp, right? So if you sold above 24, you would grab 1 or 2 points. If you bought below 22, you would grab 1 or 2 points and get out of the way. Okay? Bulls are trying to get their breakout. Let me see where they can go. Okay, so I'm going to stay a little bit longer than noon, and then Brad will come in. See what's going on there? They're trying to invalidate this head and shoulders. It's not really officially invalidated yet, but good for the bulls, okay? They're going for it. Now, if they can close this bar exactly the way I expected them, we're going to try to get up to that bar 19 high, and we're going to try to break out. Now, where is that inside bar, right? So that inside bar, now I'm going to measure that inside bar. 1-to-1 target is right there. So it's right around there. That's the first official profit taking probably. But this bar needs to close on its high. It's a nice bar. It's the second leg up now that the bears are trapped. It's beautiful inverse head and shoulders. Left shoulder, head, right shoulder. Double top breakout. So they're trying to get that measured move target. So good for the bulls. It's spinning out exactly the way I thought it would be. We need this bar to close bullish and get above this green line. But I'm going to get rid of that green line. You no longer need it. Now, can the bears sell here? Sure. They're looking for a double top. Okay, we could go up and actually trap the bulls and come back down. That could happen. But right now we have a beautiful midpoint close of the bar 19. So now bulls are actually gapped up with that bar open. So that means there's bullish pressure. Look at that gap. Hello, hello. I like that. That should push us further up to test the high of bar 19. If it doesn't fail and close that gap right away. So we should test 64 and then push further up high. We closed a bull body above the inside. This is the inside bar, bar 20. We closed the bull body. That means, and we gapped up. That means we're going to get to that 1-to-1 target, 21 ticks. Say 20 ticks. So that's about what? 5 points? I don't want to see. The only problem here that the bulls are having, this is a trading range, and they're testing kind of the high, but we're not really at the high, but some bulls are scared. They're like, okay, this is a trading range. This is not good, but I think we should keep going. Unless they surprise me and print a huge bear bar, then you should get out, because that could end up being a lower high double top major trend reversal. So right around here, the limit order sellers started to show up. I don't like that. But it really didn't go up all the way, so okay, so now this is not what I want. This sure is not what I wanted. Limit order sellers are blocking bulls from going higher. But hold on, this bar hasn't closed yet. We had the situation happen down here with these two bars, okay, 12 and 13. So this is still a bull trend. Let's not just get panicked. If you bought this, your stop still underneath this bar right here. We had that exact same situation happen right here. So I'm gonna wait. If the bulls close this bar, once this limit order sellers get out of the way and scalp out a couple of points, and if this closes bullish, we're definitely going here between that and that. And in fact, we could push all the way to 40.73. It's not there, but 70, well, it is there, one tick below. So bulls really need to prevent this bar closing below this and that criteria, like these two lines. Get rid of that. So You also have impulsive move. Maybe 1, 2, 3, 4, 5. Yeah, we're going to eventually come down here to these levels. Okay, somewhere there or there. I just don't want it to be a major trend reversal right now. But if market is going to try to get that major trend reversal, look what's happening on here. We have not closed above last week's high. We have not closed any bull bar above this line. Bulls really need to get going, okay, if they want to get bullish and go up to the 72, 73 area and then sell from there. I will sell that. It's just that I don't see a bull bar closing above these levels. But I haven't sold. If I were to do one thing, I would have been long. But where's the continuation? That really is horrible. But let's just wait. I think the bulls are still trying to push further up. But if this bar closes bearish now, we could suddenly come back down here. But I don't think we will up until bar, I'm thinking maybe bar 36, 37, maybe 38, 40. We're still above the 59.50. So that bear bar did not close below it. So by the time we pull back to the EMA, it's probably going to be, it's going to go there and then it's going to start to descend down. Okay. So bulls still have it. Bulls still got this. They just need to get serious. Like go close above 40.61 and that should seal the deal for them. But we need that bull bar now above 61. Okay, so if we can close above 61, then we should be able to test the highs. Unless we get a bear bar, then I'm done. It's just, there's no energy. It's almost noon. But market is still bullish. It hasn't made a new high, and that's the problem. So the bears are trying to exploit that, but they're not doing a good job. They're disappointed here with bar 22 sell, okay, but they kind of broke even by selling at that high, okay. They sold there maybe, they sold above the 24. They sold it. They might even be still trying to sell. Those are the ones that have not broken even. So they are basically panicking because smart ones already broke even around here. But now that this bar happened and they're selling that, okay, they're hoping to get the price down further to get out. And that's what this whole struggle is about. There's still bears probably haven't gotten out. But if this bar closes bullish, many of those bears who still haven't left the market will speed up the process and they're going to hit close and we're going to end up getting bull bars very quickly. Okay, so all depends on how this bar closes. I need this bar to close above 40.61. Then it's fine. Then it's all sunshine and beautiful skies and, good sailing weather all the way to the top. Not that I sail or anything. In my head I do, but still waiting. That 40.59.50 is proven to be an interesting decision-making point here. Now, can this collapse and start to sell? They're going to have to close a bear bar underneath here, and it's better be a strong one. Then we would come down to this trend line, which happens to be the EMA. But that means there are probably buyers waiting there, and we will probably going to bounce. So this is when I would give up on bulls. Okay, so if a bar like 26 is not getting any continuation and it's kind of getting rejected at the highs like that, then I would go back to is this a wedge, double top, lower high, major trend reversal? Well, I do have a neckline here. Bears now need to show me strong bear bars and a possible bear flag, and then come down here, take out that midpoint, come down and test this low. Sure, that's still a possibility, but I don't know. Right now we have two bear bars. Okay, so the bar 28 closed nicely, and that's the second sell, or even the third sell, right? So we did not make a new high, or when we did not really make a new low either. So maybe first sell, maybe second sell from the highs. So that will be low 1 and low 2. All right, so now I'm giving up. I'm totally give up on the bulls now. I'm done, because we're now back to testing the low of that bar 19, and the Feds started to talk again. Fed George, some Q&As coming up, so I don't know who he is, but it's still a Fed week. I'm not trading this. I'm done with this. I'm gonna wait. So they're trying to sell this now. Some bears, did they make any money? Let's see. 7. Yep, they have made money right there by selling the 28 close or below for continuation. But it's a limit order market. Buyers probably were there. Bears want to now come down and test that midpoint. I don't know. Even if they do come down, that's that 20 plus point, 20 plus bar. First touch could become a bounce at the EMA. So I'm done with this now. I'm no longer interested in. If we close below 53, we're definitely coming to test the midpoint of here. But watch here, we might get a bounce. Now we have 3 bars. 3 bars, it can constitute a bear flag formation. Even though if we bounce here, we might end up making that bear flag and coming down, because we now have a double top, and we're probably going to come down and test. So first test, this is where the bears are trying to go. First, they need to break below this trend line, then come down here. So I'm no longer bullish, because these bears need to finish their objective now. So can I be bullish again? Sure. I'm just going to wait what happens at and below the EMA first. So what happened here? Well, I put that line for a reason, okay? Beautiful close. Well, where is the second bull close? They did close that body. Okay, I was hopeful, but I didn't buy it. I was like, what is that? I wanted to see bulls actually taking out that and get a breakout. Then I was going to buy. I was going to scalp there, and I was going to take a runner all the way up. But where is the second consecutive bull bar above the midpoint of this? So what does this mean? That means we're still in the play for the inside bars, possible 2 to 1. We could end up coming down here. But at this point, watch what happens at the EMA. If you have sold this, pay yourself at the EMA and have a runner for 50.25. Buyers are probably here, and we're going to bounce. We might bounce somewhere here underneath the EMA. So we're so close to the EMA, they're now finally trying to test it. Okay, fine. We didn't fully test it yet, but can they still keep that gap open? That's what they're trying to do. So I'm going to get rid of this. They still couldn't touch that EMA. So gap is still open, but 3 bear bars, we should come down. In fact, I think we will test that bar 23 low. This leg, most likely to get another leg, that is now a strong, okay, that is now a strong, it became strong, sell the closed bear bars. Not that strong, but still, it's a good effort, okay. We need that EMA to be tested. What happens if they can't? Well, that leg needs a second leg down, at least, and maybe a 1 bar bear leg, but it needs it, okay? So, and then maybe trap the bulls and then go, sure, I'll take that. But it needs a second leg down. Now, can the bears actually swing this all the way down the next couple of hours? I don't know. They might. We're still bullish. We now have a triangle, so let me get rid of this. Okay. We need a third touch and then see what market does. I mean, one thing I see that bulls are not letting go. Good for them. But 3 bear bars down like that, I like to see another bar coming down. We have not tested the EMA. We've come so close to it. And the second leg down should finish that job. So I don't want to buy this yet. If you do buy it, you're also buying smack in the middle of this triangle. Okay, right in the apex. So you're basically hoping that we're going to go up here and we're going to test that again, maybe break out finally. Now, what happened here? Again, it's the typical mother bar trading. That is the mother bar. Okay, we had a breakout to the bear, downside. Bar 22 is the bar that closed and it actually took profit. We saw that, right? Then came back up and I wanted to see a breakout. But look, that midpoint, we did not get consecutive bull bars closing above it to go test the high of that mother bar's range and eventually break out. So if they're not ready to break out, I can't assume we're going to go up there right away. So now we come back down, look at it. So there's a reason why this bar 29 failed to close. It's because bears are not able to break out. Look, there is no breakout here. This is not a breakout. So now we have lower highs and higher lows and we have a triangle. Now we're back inside here. Can the bulls get another chance? Again, 59.50 is my target. We need to get above it. So basically we're going sideways. Okay, so I'm going to pull that. Where is that chart that I showed you guys earlier? That was earlier up here. Oh, here we go. Okay. So let's talk about this right here. So they kept see how many bars that they have kept that gap open? Similar thing is happening. But finally, there's a much better defined wedge here, okay? And then we get that bear flag underneath the EMA sells, but then we go into a trading range for the rest of the day. Okay, so the Fed's talking, and they're talking rate hikes yet again. All right, so again, we still don't have that breakout bar. We need that bear bar to close outside to come back down further. Nope. See? Okay, Feds are now turning this around once again. If we do close above 59.50, these targets are still intact. So, but first we need to test that. Okay. Now, breakout, this could be a final flag, guys. We could quickly test some targets and then come back down. Or we're just going to fail again. So I'm sitting on my hands. I don't like this Fed news. Okay, so now we're selling. All right. Finally, they made a decision. They went up. So now you see what's going on here. Get rid of these. That's a bear flag right there. And I did say, okay, if we cannot get above this, they gave me a hope again, but that's what the news bar was. As long as you have this line, you know if there's no bull bar, you're not going to buy it, right? So what happened now? I said this 3 bars needs a second leg down. Finally, it got its second leg down. And I said it's probably going to come back down here to the midpoint wick, and we might turn around at or below the EMA. We just tested the EMA. All right, finally, we have a decision. I mean, I was really getting tired with that nonsense. But I guess they were waiting for Fed George's comments. George. I don't know who he is. He's still talking rate hikes. So this is now bearish. So 50.25 is still target, but if the bears actually close a strong bear bar underneath EMA, we might pull down a little bit. We can actually end up coming down to 40.46, 40.47, and 40.46 area. Now Fed Bullis is talking. So this is why, this is all news related now. So if you do put your trend line again, we're breaking the triangle. Midpoint test is important because the bears are still trying to get that wedge double top, lower high trend reversal. But they need to close this bar strongly bearish and preferably below the 50.25. It will bounce there because there's a trading range here. But I think we're going to end up coming down to 46.50, 47, maybe even 45. So that was some struggle over there. But once we identify the boundaries, we kind of know what's happening, right? So I try to keep you guys alert with this number, 40, with this price level, 40, 59, 50. All right, so now we have a strong bear bar, okay? So if that bar closes like that, look what happened yesterday, right? If it closes half the size, that's still a high probability sell, right? So, but there are probably buyers. There's a trading range here. There are probably buyers waiting down here. And in fact, when you have a double top and a neckline, you want to see a little bit of pullback to the EMA and then get another leg down. And that would actually give us some kind of measured move target to the downside. Okay, so hopefully the bears can actually close this bar bearish enough. And then we go up a little bit due to the trading range low and then find resistance at the EMA and have that bear channel to create a bear flag breakout. That would give us the measured move down target. So bears are still trying to come down to 46.50. See if they can continue their journey down to 46.50. That is a breakout. But like I said, it's probably going to pull back to the EMA. Now, can there be any buyers here wanting to buy and go back up? Get rid of these for a minute. I can always put them back, but sure, they could. This breakout bar needs continuation. So we need sellers here as early as 50, 40, 40, 50. And price can come down to 40, 45. Okay? I'm looking at the ATR. ATR, actually, it's a lot more than that. So let's see if there are actually sellers here. ATR is 575. So 5 points take out 45. Yeah, about maybe 44.75. We have a potential pullback to 44.75 if ATR does not go down. So let me do the math again. 50, 45, take out 3 ticks, 44.25 we might test. So bears are trying to sell this to, let's see, I'm going to mark that. As early as the bounce could come in at 45, okay, but they're trying to come down to 44.50. But as early as 45, we're going to probably bounce because this is the trading range lows. There are buyers sitting there, and I'm watching ATR. So ATR is basically, if I'm doing the math right, it's telling me we could end up actually testing 44.50. I'm not good at math. I need a calculator. My calculator battery died, so I'm trying to do everything in my head. Pretzel math here. Yeah, we should get down to 45. Expect a bounce there. All right, so ATR is now 6. I'd like to see at least 46.50 tested, and then continuation down to 45 at least. For scalpers, buyers are waiting there. Be careful. It's a breakout point. Bears are trying to close the gap. They're going to have a hard time closing it. So there, or maybe at 45, take profit, or as early as 46.50. So, but it's also the second leg down, okay? And can the bears get trapped here? They could. So if you're selling this, also you have to know that if there's no continuation down with a bear bar, we could end up getting trapped. But I think we will be able to sell this a little bit further down. I sold it right here. I'm just not making any money. And I only have, ATR is 6, so I'm only going for 6-point stop. So I don't want to give back no more than that. That's the highest I can do. Okay, waiting for rejection at the EMA, but it's kind of trying to close above it and go back up again. So I'm going to wait and see what it does. Okay, so ATR came down to 5. Those who sold this bar are disappointed, so they might be selling again to see if they can actually break even, or they're going to sell at the highs here, and they're going to try to get break even in the middle. So they might sell, if the price goes up, they're going to sell up here because it's still a trading range and also the bear bar, and then they're going to try to break even in the middle. So if this bar closes above EMA, that's game over for the bears. All right, so it's not doing what I wanted to do. It went down a little bit. I didn't scalp. I should have scalped, and it just turned on me. So this might end up being a scratch. Or I'm going to get that break even, but I'm going to wait. I'm going to wait to see if actually bears can sell this all the way down to the low of bar 31. But if this bar closes bullish, I'm out. Yeah, I'm out. Yeah, I took a loss there. This is my loss now. This trade basically is a loss. Oh well. I got excited there, but unfortunately, bulls wanted to buy underneath the EMA, so now we go up. But at this point, I'm going to wait for the next trade. Yeah, that breakout failed. And I was looking for that quick pullback and sell. That failed. So now I just didn't want to. I could have waited and sold here, but it's better to take it while the losses are small. Just take it. I can always make it back. I just didn't want to deal with price now going all the way up here, and then I have to, sell it. It may not stop here. It could finally get above and keep going up. So I'm no longer interested in this. And we already tested. It could still come down, but I'm no longer interested in those targets because I'm out. So it could still come down, but they need to print a bear body with this. And the market is not bearish. So, oh well, that's disappointing. Now I got to hunt for another trade. All right, let's see. Now sellers are probably right here, and these disappointed bears haven't really gotten a chance to break even yet. Bulls can take this price up to 58.25 if they do close this body on its mid and high. It's a bull close above the EMA. Now they might be trying to get the break even, or they're looking for at least a test of where they sold. On the ETA chart, it's actually a bear flag, so it could come down, but I don't know. I'm out now, so those who sold maybe above 32, a little bit higher, are still trying to break even. Or if this bar comes down and takes out some of the bears and then suddenly goes back up, they will be selling again here. But right now it's coming down. It still has a potential of becoming a bear flag, I guess. So maybe I can make some of the money back. So let's see. I need to see a bear bar closing below 50. Then it can come down to still 46.50 area or 46 area. But they need to close this bar bearish. If they still want this bear flag, they're going to have to do much better than this. Okay, right here, some bears will probably break even and probably going to start making money as this starts to go down below. They already broke even, so that's good. So now they're looking to see if they can actually make money with the second contract. They are making money now. So good for the bears. This could continue to come down to 46.50. Let's see if they can. It's a bear flag, but it's just struggling. Buyers are underneath 46.50, 45 area. I still want this to come down 650, 45 area. I still want this to come down. So instead of selling above 32, I ended up actually selling below 33. and made some of the money back as it came down to break even. I exited the short because I did not like the 33 closed. I didn't like the 32 closing like that, so that was really upsetting. And then I saw the 33 closing above EMA. That was kind of upsetting. So I said, I didn't have to. I could have sold again, but I thought maybe we would go up here, and I really didn't want to take that, pull back. So I got out. But then I sold with a sell stop order. So I'm going to sell this, and I'm going to put a stop right there. And I grabbed that scalp right away as it came down here, and I made good money there. And basically made everything I've lost back, which is a good thing. But I have to be quick about it. Now, I want it to come down to 46.50, but it's just not doing, if this is a bear flag, what kind of bear flag is this? So if both underneath the EMA, it's looking to buy again. I'm going to wait for the SPAR to close. So if bulls want to go up to 58.25 and then further up to 63.25, that's fine. But if they need to close this body now bullish above the EMA once again. So then we would have two. All right, it just closed right at the EMA. So I don't know what kind of bear flag this is, or what is it trying to be. I'm going to wait to, I'm not going to do anything with these bears. I'm going to wait to see if I can actually buy. If the price comes down, I'm going to look to see if I can actually buy underneath bar 12. Yeah, I do see a TR, but it's also triangle. Okay, it's trying to break down. There is a gap here. Bears are trying to close, but I think there are buyers in this area. There's a double bottom. There's wedge. So, I mean, this is a mess. If bulls want to buy, that's fine. I'll buy it too, but I like to buy a little bit down below. Okay, so just wait a little bit. Hang on. I think. Okay, I'm waiting for Brad to come in. Could this be a bear flag finally? Can they finally sell this into the 46.50? I want to buy down there. All right. Okay, that's good. Fill that wick with a bear body. That would be a good bear pressure. That's good. Now, I'm looking for bears to now see if they can actually come down to that 46.50 and furthermore down to maybe 45. Still waiting. It could do anything. I mean, this bear flag looks really weak. Nothing's going the way I want it, so it's total confusion here. Bulls might be looking for a double bottom to buy and go, but I like them to actually buy below the 46.50. So stop playing. Come on, keep pushing down. That's good. That's good. Good, 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 good. Yes. Come on. 46.50. Come down and get it. Maybe even further down. 45 or 45.25 is target. Let's see if they can make it. It could come down to 43.25. Why? Inside bar 32, breakout, that's the first target. 43.25, maybe one tick above. I don't know if they can make it. But 45, they're testing, so that's good. But we're in the buy zone now. Trading range, maybe underneath bar 12. See if we can actually continue to come down here. That's 43.25. But 45 was my, last, so I'm going to see if they can actually sell here at around 48. See if this pullback, actually they can find some pullback sellers here and then sell into that 43.25. Okay, so they're selling the 40.48. See if they can come down 5 points here into the 43 area. Fed George starts to talk again. Every time I try to trade, he just starts to talk. Go away. We don't care. Let us trade. This is terrible. I hate this. Every time I open a trade, he comes in and says something about rate hikes and whatever, and then the whole thing turns on me. Oh, now it's Fed Wallace. Both of them. Did they take a break and waited for me to open a trade? So that was the bear flag right there. Now we have a wedge, 1, 2, 3, and the bulls are trying to buy again. So those who actually sold the 48, all they could make was a 2-point. I mean, it's good scalp, but that's not what I expected. I wanted to come down like 5 points. But I did say that if you did sell 46.50, maybe a little bit lower at the 45, buyers are waiting. We tested 45.25, so I guess that was sufficient enough selling for bears. I'm going to wait a little bit more. This could be just a pullback before we sell into a little bit more. They're talking unemployment, they're talking rates. I mean, I think when Brad comes in, I'm going to go have lunch. Okay, so I'm going to end my session. Hold on, Brad. Are you here? What do I do? I'm not supposed to close this, so let me give you presenter rights. Hang on. Here you are. Here you are. But hold on. First, I need to close this. Then I give you, here you go. It's all yours.
Sorry about that. I had the my external mic muted. Can y'all hear me now? Perfect. Just one more second. Okay, so great information from Rose. It's always a lot of fun to get to hear her talk about her commentary. So overall, with the day, let me just adjust one more thing here. I've got this, let me pull up the daily chart really quick. Here we go. So on the daily chart, we've had 3 consecutive bull bars. We gapped up today. And the one thing to pay attention to right now is, especially with it getting close to the afternoon hours, is the weekly chart, which is right here. That's how your trade station always acts up. Here it is. So the weekly chart is currently trying to close on its high, and you can see there's a very small tail on top. And right now on the daily chart, we have 3 consecutive bull bars, and you have to ask yourself, we have a gap up. Sorry about that. I've got, of course, I would have technical issues as soon as I start talking here. I've never had that happen before. There we go. So 3 consecutive bull bars to gap up, and you have to ask yourself, is this really going to close on a tie and be a third bull bar closing on a tie? And if we look at the 5-minute chart, as we know, if you look at I'll pull it up in a minute, but today is arguably a trend from the open, and 60% of the time when you have a trend from the open, the day enters a trading range, which is what's going on right now. So I do not think, let me draw the midpoint of the day. I'll leave it. It's basically the low right here, but I'll draw it in a minute. I think the day is going to try and close around the midpoint of the day, or possibly try to get closer, maybe slightly below it. And the reason is, I think the bulls are going to be disappointed on the daily chart. Okay, just hang with me. TradeStation will never cooperate when you make the screens really small. So anyways, going on with right now, we have a wedge top, 1, 2, 3, and 2 legs down, and you can argue it's kind of a spike in channel with 3 pushes. The bulls had a second entry buy, a double bottom, testing. You know what, let me put on, one moment, let me add the bar counter. I don't know why it's not showing. Just 1 second. There we go. Y'all should see a bar counter now. So the bulls have a double bottom with a 12 low and a second entry buy with 36. And it's a reasonable place to buy, but you're probably in a trading range. You have to ask yourself why the big tail forcing you to buy just under the moving average. Might be better to wait for, and yes, this is the December contract, probably better to wait for a couple bars, maybe 2 or 3 consecutive bull bars, but you are in the bottom of what could be a trading range. The bulls have an open gap here, the 2 high and the 12 low, so that's good for the bulls. But again, the other thing I wanted to point out that I forgot to mention is this line right here. This is the August 26th close, and you can see the double bottom, the high 2 buy triggered. Let's see if they get good follow through. But back to the August 26th close, which is right here, this is a surprise bar. And we sold off, and now we're testing back to the August 26th close, which is this bar right here. And there might be sellers back over here. I'll just draw that line so I don't forget it. And the reason for that is some traders arguably bought the close, even though it was a surprise, betting that the market would get back to it. So they buy more lower, and we're back at that price level. So this could be resistance up here, and it's also at the moving average. So that's why I have this purple line or magenta line drawn right here. So let's see. You can see bar 35. Some traders sold the close, disappointed 36, trying to get out break even, back to 36 low. I don't think the market ever went all the way in short, but again, I think the market's in a trading range. So this is not as strong of a, it's not obviously a strong bull trend. But I do think a lot of always in bears get out above here. This is a strong enough breakout. Arguably, you get a second leg. The bears, they got 1 leg here, maybe another leg here. But I'd get out of shorts above this bar. So good close for the bulls. See one thing real quick. It's a reasonable buy above for a swing trade. The traders that are buying it, they're betting on a double bottom with 12 and a retest of the 17 high. And let me see one thing. It's interesting. Here's the bar 18 range right here. So 4 low to the 17 high. The bulls try and break out of the bar 18 range. So maybe we test up there. And even though I think the day is going to close around midpoint, which is somewhere down here, at some point today, that does not mean that the market won't rally back to a new high today. It's a good close for the bulls, close slightly above the moving average. The biggest problem I have with the day is we've really been sideways since bar 8, maybe bar 7. And if that's the case, we've only really had 1 strong bull bar, maybe 2. But we do have this gap right here, and I drew this purple line, that's kind of a reminder that there's this open gap right here. So again, this is why always in bears get out above this bar. The market never went always in short. You know, where are the two or three consecutive bull bars that are strong? Excuse me, consecutive bear bars. Good bear bar here, bad follow through. When that happens, some traders will buy above this bar and buy more lower, maybe the low of 32, confident that the price will get back to the 32 high. Other traders, they know this is a surprise, and therefore they'll wait for a second leg and then look to buy. So let's see what the bulls do here. Traders that buy above here or above here. Let's see what you bought here, 71.5. Let's see what those traders do. You know, again, even though I'm not advocating, I'm suspicious of the bulls, I'm not advocating being short right now either. You know, if this is a trading range, this is a second entry buy, arguably a wedge bottom, 1, 2, 3, double bottom here. It's low in the trading range. But so far, this is good for the bulls. Bar 6 and bar 7, bar 8, good for the bulls. Probably the dominant feature of the day. They got a second leg up here. And, you know, maybe it's a channel, spike, pullback channel. The bears tested the bottom of the channel here. So what do the bulls want? They want this. I'm going to remove this, but I'll draw it back in a minute. The bulls want a break above the neckline and measure move up. And today is Friday, so you do have to be thinking about some kind of surprise later in the day. Fridays can typically, since everybody's deciding on the end of the close of the weekly chart, you can get very big moves that are surprising, you know, in the final hour of the day, maybe the final 2 hours of the day. So let's see. No surprise, disappointment. So for the bears, maybe they see 2 legs up. Let's see if the bulls can get a strong close on 38. I'm looking through the encyclopedia right now, and I'll pull up some charts in just a second. So there you go. Why the tail? Good bull bar for the bulls on bar 37, but then weak bar for the bulls on bar 38. That makes me suspicious. We're right back in the middle of this range from from bar 8 all the way over here, and we're starting to hesitate a little bit. Still, probably buyers below 38 and at least a second leg up, but you have to wonder. So becoming always in long, good for the bulls, but let's see if they can get another close. Let me pull up Bitcoin real quick. Bitcoin's had a strong rally today. You know, 1 second, there we go. So here's a daily chart of Bitcoin, and selling off, couple legs down, sideways for several bars, 3 pushes down, 1, 2, 3, and the bears tried to break below the July lows, and looks like the bears are getting up here, probably strong enough that the first reversal down will fail, and the bulls will get a second leg up. You know, maybe test 24,000. However, still time left in the day. It's important to see, you know, it'll be interesting to see what the daily chart looks like on Monday. Will Bitcoin have a second strong bull bar, or will it be kind of like this, where will Bitcoin have a bear bar and then a second leg up? So it'll be interesting to see that. I do not trade. I've never actually traded Bitcoin, and maybe I will one day. But I know Al's traded it some, and it's nothing against it. It's just I'll mainly look at Forex markets and then the ES or the SPY. but I try and just stick with the S&P. So whether that's the ES or the micros or the SPY, I try and stick to that. And the reason for that is I used to be very adamant about trying to trade several different markets, but I think the longer one trades, the more they realize there's actually a whole lot of trades on one chart. And I know Al, everyone's heard Al talk about that, but if you really just think about it, even today, there's a lot of trades where if someone's feeling really aggressive, bar one, bull bar, but it's 20% chance it's the low of the day. That followed through bar two, so there's probably buyers below bar two. The bulls that bought, they're disappointed, so you could set a limit order back at the close of bar one during bar three for a scalp. Some bears will sell this close, betting it falls below, and some bulls will buy the low of bar one. Traders will buy the low of bar five. Traders will buy the close. They'll buy the close of this. They'll buy the low bars. There's just a whole lot of trades, and I'm only saying that just to make the point. Most people, I think it's natural to want to look at several markets at once, and because you think you're going to make more money. But I think the longer someone trades, they start to realize if they really just focus on one or two markets and try and trade those really well and trade more volume, they can do a lot better. So what bar are we? 39. Again, it's always been long, but look at these bodies. Good bar, 37. Weak body, a weaker body, probably buyers below, but the buyers might come in back to 36 high. If I'm a bull, ask yourself, are you really eager if you bought the 37, bought above bar 37? Are you really excited about 38 and 39? Probably not. You're probably thinking, at least what I would be thinking is if I bought it, I'm probably thinking, gee, I wanted a strong breakout. Why are we pausing in the middle of the range? That's not good. Maybe I should get out of here. So bulls are finding hesitation. They're finding confusion. It looks certain here. It looks like we're going up, but then everybody's scalped out. Well, if everybody's scalping out, that means they're uncertain. If you really think about it, a scalp is betting on disappointment. And the reason for that is, let's use this area over here. Traders, bar 6, they buy the close. Bar 7, they buy the close. Well, if you think about it, a lot of the bulls that bought up here scalped out over here. And the reason they did that is they were betting on disappointment and that the market would pull back. So you would not sell for a scalp, or you would not sell out of a long and scalp out for a few points if you thought the market was going to go 20 points higher. It wouldn't make any sense. Therefore, when you're scalping, you're anticipating disappointment. And the reason I say that is traders are buying. They bought here and scalped out. Even bulls that wanted to buy above this bar, instead of buying above 36, they tried to actually buy lower around the 35 close and scalped out for, 5 points, maybe 10. So probably buyers below 39, but they need a wide stop. And they're probably going to take profits at the 39 high. Yes, Rainey, I see your comment. I am a big fan of trading the SPY. I really think it's one of the best markets. The one thing I hate about it that I think is just really dumb is the pattern day trading rule if you're in the U.S. It's never made sense to me how you have to have 25,000 in an account just to meet the minimum, but you're allowed to trade a futures market and you can put, $1,300 in an account and trade micros. It just doesn't make any sense. It's just asking people to have really poor risk management. And I genuinely hope, even though I don't think it'll ever happen, unfortunately, I really do hope that one day they get rid of the pattern day trading rule. I think it really, it's unfortunate because it really screws with people's thought process on trading properly. If you're able to, if you think about it, the great thing with the SPY is I would much rather trade 50 shares of the spot, which is the equivalent of 1 micro, than 1 micro. And the reason is it gives you a ton of flexibility. If I trade 1 micro and I buy the low of this bar, what are my choices? Well, the only choice is I buy the low of the bar. I can't scale in. If I'm trading micros or something like Forex, I could trade a 10% position and scale in all the way down. I could use a really wide stop. And there's just a really big advantage to that. If you really think about it, you know, put yourself in the eyes of an institution or a trader that trades 50 minis. They are not going to, I think very few of them are going to enter a full-size position, you know, at once. They're typically going to scale in and scale out because it gives them more flexibility. But I'll talk more on that later. So going outside up, again, always in long, but, you know, hesitation here. That's not good. How long have I been trading? I've been watching out and I guess trading since 2013-ish. So pretty much 9 years. So bar 40, good close for the bulls. You know, close on high makes me think the market's always in long, but, you know, gee, I don't like that. I do not like 2 legs up in what looks like a trading range. That makes me a little suspicious. Well, I don't want to sell right here because that's, what is that, 4 or 5 bull bars in a row? It makes me hesitant. You know, if I bought, I'm kind of thinking, you know, gee, if I bought here, I'm disappointed with 38, 39. Maybe I should take profits and scalp out. So I want to be careful about answering any questions about, you know, my personal trading. I don't want to go much into it, but anyway, there's certain regulatory aspects in the trading world that I'm kind of under, and I don't want to make any claims about myself. So I'm not going to answer any questions about that. But what I will say is I can talk about the perspective of what I think people go through with trading, especially setting out, because I know people can relate to that, and really just trading as a whole. You know, the first piece is there's tons of mistakes you're going to make. All sorts of, exactly to Redwood's point, there's all sorts of trading mistakes you're going to make down the road. And the most important thing is to be able to trade small enough to where you're not going to, you know, financially kill yourself, for lack of words, or ruin yourself. You know, you got to be able to survive the drawdowns. And the first piece, you know, if I'm studying now, if I was going to pick up Al's material today, what I would do is the first thing is start with the video course, because I would want to listen to Al in the room, and you can do that with recordings. I would buy a year's worth of recordings personally, and I would just dive in. But first I would really study the video course, because you can listen to Al, you can listen to Rose, you can listen to whoever, but if you don't understand the basic concepts of Al's course, it's not going to help you as much. The second piece is after you've started studying the course a lot and getting a good grasp of it, is really listen to the trading room and really understand the psychology, if you will, of the way someone talks. What really helped me was listening to Al and him being so calm in the market. You know, he wasn't ever that eager to, he just didn't seem that eager. He didn't seem fearful of getting in or worried about missing a move. And it's really important to understand. But, you know, it certainly takes a long time, but you just keep studying. Okay, so bar 41, we have a gap, the 41 low, the 39 high, so kind of a micro gap. You know, what do the bulls want? Maybe they want some kind of measured move, kind of like that. But, you know, good for the bulls. It's always been long. But you're getting high in the range. So, you know, you're kind of getting back up at this price level, 40.80, where Traders sold earlier. They sold here. They sold here. So while this looks good for the bulls, I'm not necessarily eager to sell. I'm hesitant to, want to be long up here. Yeah, Suki, and I apologize if I messed up your name. I agree with your comment there. Most, you can learn anything from a bad trade. So I think one of the mistakes people make is they have a really bad trading day and they just get, it's okay to be frustrated from it, but you can learn a lot from mistakes, especially if you really just think through it. And if you're frustrated, sometimes it's best just to, wait 24 hours, sleep on it, and then revisit that day and figure out what you learned. The other comment about, becoming profitable and consistent, I think one of the, go to the BrooksPriceAction.com website, and you should be able to subscribe to, a year's worth of videos. I think it's like, I don't remember the price, but it's pretty reasonable for 12 months of videos. But one of the things to becoming consistently profitable, I firmly believe, is learning how to swing trade. And to me, that is learning how to trade always in. It's the fundamental concept of Al's methodology. And, how do you apply always in on a day like today? Well, it's arguably maybe always in long above bar 1, but most traders like consecutive bull bars. So maybe it's bar 6. It's always in long, I buy above bar 6, and, it's not always in short in here, so I don't get out. And then what do? Do I get out below 16? Maybe 3 pushes up, 1, 2, 3, but tight channel, so first down should fail. So really my stop stays down here, and arguably I hold below this. And then maybe I get out here. This is a lower high major trend reversal, bar 27. And if you're aggressive, maybe you sell here, but then major trend reversals usually evolve in the trading ranges. And if you have a major trend reversal, you have a trend resumption pattern, which would be, for the bulls, a double bottom. So always in bears, maybe they get out here, maybe they get out here, and then bulls have to buy. The reason that's important to understand is that is the foundation of scalping. So give me just a few minutes, I'll be right back. Okay, I'm back. Yeah, all the trading room stuff is on the Brooks Price Action website right now in regards to that comment. So again, we have 7 bull bars in a row, bear bar on 43, tight channel. I don't want to be selling here because the channel's tight, but I'm a little bit suspicious. This is not just, it's good for the bulls, but I want to see something like this. This is still disappointing. Some bears sold the 33 high over here. So some sold the 33 high here. Maybe they scalped out on 40s and went down. Others did not sell. They did not, excuse me, let me back up. They sold the 33 high. Some bought back or short for a scalp down here on 40. Others held, sold more higher. And look what's going on right here. It's a 33 low. You have a gap. So imagine if you sold this high over here, you didn't scalp out here, you sold more here, you may be worried about this rally here, and you're trying to avoid a loss or trying to get out break even. So that's that red line. And you can see we're testing it. We're right there. So that makes me a little concerned for the bears and makes me think that the market will go a little bit higher. But again, obviously I'm talking here right now, so that might give me a little bit of bias of not doing anything. But, right now, if I had to do anything, I would be long. But again, trading range, always in trading is important, but you still have to respect the market cycle. But so far, for the bears, it's hard to make money. They haven't made money selling below a bar since bar 36. So, this is good for the bulls. And, it could lead to an upside breakout. One thing I want to point out is We also were at the high of the last week, 80.75, 80.75. Oh, okay. So that's important. Let me go back here. 1 second. I didn't even have that marked. Give me 1 second. Let me do this. The 29th through the 2nd was last week. I just want to mark the high of last week. Oh, obviously it was. So I'm marking the high of last week. I think that's more important than the August 26th close I was showing. And you can see that the market is bouncing quite a bit. So it tested the high of last week here, 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 sold off, testing it here. So I think it's just pretty important. Okay, high one buy, but air bar, you know, again, you're at resistance, but the channel's tight. So probably sellers above, but you know, gee, we could get a surprise breakout here. I'd rather just wait. Some bulls are disappointed that bought the trying to move the go to webinar screen. They're disappointed that bought the 42 close, disappointed on 43, some trying to get out break even here. I'm pulling up the encyclopedia. So I turned off my screen for just a moment. And I'm just letting it load for a minute. So what's the chance of this being a wedge top or a double top major trend reversal? So yeah, you can make that argument. Al will talk about this sometimes where, so we have a bull trend, trend line break, and a retest. And you can argue over here that on bar 27, let's do like this, bar 27, the market is formed a lower high major trend reversal. The issue is not enough bars down probably and not enough bars up for the retest. So it was probably going to go more sideways. And when that happens, you often get a retest here, and now the market's trying to form a double top. Some computers will, let's say the 80.50, 81.50, they've already stopped out, but some computers will actually sell 1 or 2 ticks below the high of this bar on bar 27, put the stop 1 or 2 ticks above, and they're risking, you know, 1 point maybe to make 15, 20 points. And with the range getting bigger, maybe they're risking 2 points. But again, that's a computer doing that. I don't think traders should take those kind of trades. Most traders should really try their best to find reasonable swing trades that are, you know, in the ballpark, you know, that 40 to 60% range. You really don't want to be, you know, you don't want to necessarily buy the close of a bar risking 1 or 2 ticks or 1 point, because you don't want to have a strategy that's 20% profitable. Even though those strategies can work and algorithms will take them, it's emotionally just too difficult. So 44, you know, kind of a wedge, 1, pullback 2, pullback 3, or 38, 42, and then, you know, 44. But again, a lot of bull bars trying to become a small pullback trend, and we're trying to break above the high last week, LW last week, H obviously high, so high last week. But again, I don't want to be buying up here when the bulls failed twice. They tried here and failed, tried here, and they failed. I think they're going to fail up here, but I also want to sell below. I'd rather take a stop entry to sell, and even if we get a bear bar here, this channel is tight enough that I think the first reversal may fail. So I may be trapped out for a little bit. I'm just reading questions in the chat. Is using a sim account to become profitable a good idea? I'm very scared that I'm going to mess up really bad. Yeah, I think it's okay to do that. I think, the biggest thing is, sure, I think it's okay to, I want to be careful with that. I think that you certainly want to trade a position size you don't care. I think the best thing someone can do, especially if they can get over the pattern day trading rule, I think the best thing one can do is actually trade the SPY, because right now for most major brokers, it's commission-free trading. And obviously, they get their money from the bid-ask spread and other methods, but you're not getting nickel and dimed, $1 per, 100 shares in and out. So it makes it a lot easier you don't have to worry so much about commission. And if I was starting out and had the ability, I would try and trade something like the SPY, and I might trade 1 share, maybe 2 shares. So if I'm doing that and, 10 cents in the SPY is the equivalent of 1 point in the E-mini, I'm risking a tiny, tiny amount. And that would be a way to be able to trade real money. But the biggest challenge with that I would raise is you don't know yourself yet if you're just starting out. And I would not want to put myself in a position where maybe I get frustrated and sure. Let me ask someone ask this question. Do y'all like the chart like this? I'm trying to kind of mimic how Al has it, but I think, there's something up in my screen. I'm still trying to figure it out. I've got a really, really wide monitor, like one of those 49-inch Samsung monitors, and I've got it split up into 2. So I've got on one side the trading room, the other side my other computer. Would y'all rather have it like this or full screen like this? So option B, full screen, or option A, where you can see everything. Full screen. Okay. Well. Okay. Fair enough. I'll do full screen for now. That's good. Let me go back to. So to answer your question, and again, the bulls are trying to break to a new high. It is always in long. Traders are buying, but if it's breakout, follow through, and it is always in long. You can buy betting that the first person down will fail. Again, it's too early to probably sell up here, and this is a breakout of the range. So it is probably by the close up here, but again, getting late in this move. And back to the daily chart, I still think the bulls are going to be disappointed today. Yeah, the September, this is the December contract. You can see up here, December. I'm on the TradeStation continuous contract, and it rolls it over to the December. So this is not the September contract, which is why your price is different. But as far as, I think simulated certainly is okay for a little bit, but it's easy to, you don't get the full experience of real money on the line. So you kind of have to, it's certainly a balance. Pattern day trading rule, you can Google it. It's for U.S. traders. You have to have a minimum. You cannot take, I think it's 4 round turn trades in a week or 5, unless you have $25,000 in your account for equities. It does not apply to futures. And if you take more than 4 trades or 5 trades, you get labeled as a pattern day trader, and your broker will ask you to place $25,000 in your account. So good for the bulls, always in long, probably going at least a little bit higher. We're breaking above these bars up here, and this is why I was saying I was concerned right here. the bulls, they have a gap here, the 33 high and the 41 low. So Rose pointed out the August open, which is right up here at the 98.75 area. Certainly possible we get up there. Let's see for a moment if, yes, Dale, cash account, yeah, that's right. The challenge though can become settlement. If you have enough cash, then it's fine, but if you take several trades in a day, you have to wait for those to settle, which can be a problem. And Manja, you obviously picked up on that. So a measured move of this range takes you up to the August open. It's certainly possible to get up there. I mean, again, it is Friday, so Friday can have crazy moves. And, I wouldn't bet against the market getting up here, but again, tight enough channel. Do I think we're going to pull back? Yes. Do I want to sell when the bears are really having a tough time making money? No. I think it's too easy to get trapped in a losing trade when one could wait. But again, always in long, consecutive buy climaxes, trading range for the past several bars. Traders want leg 1, leg 2, takes you somewhere up there. You could also draw that and measure move, and this is the midpoint. Kind of takes you in the same area. So 46, doji bar. Disappointing. But again, trying to form a small pullback trend. Bears are not getting any big pullbacks here. They got a pullback here of 2 bars, which is good. Increases the chances of sellers up here, but again, it's fairly challenging to make money selling right now. So first reversal down probably will fail, and probably we'll get back to these highs. Bears will sell, scaling higher up here. So probably going back lower, maybe get to the 26 high or 27 high. I'm not used to having it full screen, so I'm trying to maybe adjust it like that. And can y'all see the bar numbers okay? Better yet, just comment if you don't see the bar numbers that well. And another regard to starting out with a simulated account or putting money in an account. If I was starting out, I would put the bare minimum I needed into an account. I would not want to put a large chunk of money. I would not want to give myself the ability to have an emotional day and trade 10 times the volume. And I think that's really easy to do when you're starting out, is you get frustrated, so you take a loss, you double your position. Before you know it, you're trading 10 times the volume that you normally would. And, I would much rather, Al talks about how you should never blow an account. I agree with that. I would much rather, you can blow an account by not having the margin requirements needed to trade. I would much rather blow an account and with, $1,000, $2,000 in it than put all the trading capital I had and blow it in, a few days. That has happened to people. So again, if I'm trading the SPY, what I would do is I would put $26,000 in there, just enough, maybe less than that, just enough to get over the pattern day trading rule. And then I would only give myself less than $1,000, so I'd have to trade extremely small. You just really want to be careful about when you add more money to an account, especially starting out. It's so easy, you're going to make a lot of mistakes. We've all done it where you'll scale in against a trade, and 9 times out of 10 it'll work. So you'll sell, break even, but then you're going to have the one day where maybe you start selling here, keep selling, and then you just take this crazy loss. that just really devastates you. So, you know, you have to find ways to prevent doing dumb things, especially in the beginning. So again, small pullback bull trend. So it's too early to sell. Yes, this does not look strong, but when I look at a, 15-minute chart, this is what I see. That's a pretty good bull bars. We have an open gap here, open gap here. So on the Globex, you're really kind of forming, you have a negative gap, and one thing to look at is line charts. It helps paint gaps easily. So rally, pullback, open gap, here to here, open gap, here to here, here to here. You can do the same thing with the day session as well. Sometimes it's easy to look at the context, just look at a line chart. And what do I see? Well, I just see an open gap, a double bottom, failed breakout of the double bottom on 38, strong rally. And one thing I want to point out that I noticed Rose says a lot, and I think it's really, really important, is she mentions a lot to pay yourself. And now might be a pretty, I'm sure she might say that right now. If you bought somewhere down here, even though this is a small pullback trend, and you could tighten your stop, it might be worthwhile to consider taking at least partial profits. Another mistake I think traders make is, and which is why if you can trade something like the SPY, it's so much more advantageous, and the reason for that is most traders, they'll trade the micro, they'll only trade one micro, and they can never take partial profits. And it's really important to be able to do that. So I'd really pay attention to when Rose mentions paying yourself, because you want to take profits when you can, because most of the time the market will pull back to your entry. Just look at today. If you have a breakout, you get a pullback. And if you held all the way up here, price comes right back to your entry. And that's trading range price action. That's very typical in a trading range. And you do not want, if most days are a trading range, that means most days are not going to be a trend the whole day. You want to make sure to pay yourself. So disappointed traders, high one buy, starting to go sideways. But again, traders that sold the high of the day, they sold here. It's not coming back to their entry. So that should make bulls a little nervous here. But again, I still think we're going to pull back, but I am questioning the strength of the bears. Open gap here, starting, we have a gap here, 47 low, 42 high. This is a problem. Let's see here. This is a really important chart here. And again, I would highly recommend people getting the encyclopedia. There's a lot you can learn from this. But this chart right here, whenever you have the trend from the open, so here, trend from the open, you should always be thinking about this chart right here. And the far right, evolve into a trading range. Most of the time, a trend from the open will evolve into a trading range. 20% of the time, it will reverse. 20% of the time, it will remain a small pullback trend day. So what do I think is going to happen today is somewhere over here. And rally, sideways. And you can also argue this is a bull trend and trend resumption. But again, as far as a trend from the open day, let's just look at a few trend from the opens. What do you notice about these days? What I notice is here's a little bit of sideways, but this just seems like a lot of side. This looks like a lot more down than this chart here. So let's see. It's like a gap up trend from the open and trading range. So, okay, the bears, second entry short. take a look at the 60-minute chart. Just closed. So 60-minute chart, good bar, but you're at this high over here now. So here's more resistance. Probably not going much more up before we pull back. It's certainly possible we have to get to the August open, but again, I'm hesitant to think that we will, at least on the first attempt, but it certainly could happen. Why is 46 low and the 30 and the 42 high? Why is there still a gap there? We only had 3 bear bars in really the past since bar 36, and closed above the midpoint, maybe closed at the midpoint, closed below the midpoint. So really we only had 1 bar since bar 36 that closed near its low, and the body is tiny. So the bears are not strong here. So I want to say one thing, if you read the blog, I said today on the blog that I thought today would be disappointing for the bears, for the bulls, and I still think that. But I did not expect a day like this. Now, even though I expect disappointment and for the bulls to be disappointed at the end of the day, does that mean I'm going to just start selling and be hopeful that the bulls get disappointed? Of course not. You can have expectations about what the market will do, but the chart in front of you trumps any expectation you have. And it's really important to, you have to have that. Al does a phenomenal job of pointing that out. He is not fazed by, he may think the market's going to do something and it appeared to do the opposite. And it's just really important to not be hopeful of, if I'm saying there's no way this could be a small pullback trend, there's no way we could get to the October open, well, it certainly could. So it's important not to be hopeful. Again, my issue with the bulls right now is the size of this sell-off. That does make me suspicious. But so far, this is, it's not good for the bears. Another thing I want to say about trading small is I think it's really important to think like an institution. And what I mean by that is, pretend you are an institutional trader that trades 100 contracts. And I'm just making up a number large enough to where you could easily trade one contract and it'd be so small you don't care. And the reason for that is most people starting out do not have large accounts and they do not have the ability to trade small. But when you start trading small, you start to think differently. In other words, you build into positions, you use wider stops, you start scaling in, and you hear Al mention all the time, he's against scaling in if you're starting out. And I agree with that. However, the one main reason Al is so against it is most people will panic. They will trade too large and they won't be able to manage the trade correctly. So, I'll give you a hypothetical. They buy this close, bar 8, 3 consecutive bull bars, you're probably going higher. And even though a lot of traders might buy here, might buy lower, might scalp out during this bar, some traders will buy and, maybe buy somewhere down here. And their stop is really, really wide, but they don't panic. And if we go back on other days, it's just fine today. So traders buy here, they buy more lower, and they get out. Trying to find one that's got a fairly deep pullback. Even here, this is kind of a crazy example, but a good one. Traders that sold down here, most should get out over here, but the ones that didn't, maybe they scale in here. They don't panic because they expect the market to be a trading range, and price comes right back to the low close. That happens all the time. And going back to the whole topic of trading small, it's really important to be able to trade small so you don't have a bias. If you have to trade one contract and you're uncomfortable risking more than $20, $30, $40, $50, the issue is you'll naturally use a tight stop. You'll buy above this bar, 47, and put a stop right below. Or, you'll buy the 42 close, which is okay, but you'll put your stop right here, and you'll get stopped out on 43, only to watch the market go up, and you had the right idea, but your stop was too close. Or you buy the bar 7 close, and you put your stop down here because you can't risk anymore. You barely get stopped out, only to watch the market go up. It's really important to be able to buy and use a wide stop and be comfortable with it. Or if you're waiting for a stop entry, trade small enough to where you don't panic if you take a few losses. So again, why are we forming all these micro gaps? That's the number one question I'm asking myself, is when you see gaps in a trend or gaps in a leg in a trading range that can become a trend, it should be like a red light going in your head, sirens going off. When you see gaps, that means trending behavior. And the reason why a small pullback trend is so difficult for everybody, and get a day like this, is it has a lot of, it looks like a leg in the trading range. Just look at this chart right here. I do it like this. This looks like a leg in a trading range. But what happens is there's a gap here, and there's a gap here, and before you know it, the market goes a lot higher. So it's really important to understand gaps, and it gets easier to understand them. I'm probably more stubborn, so even though Al mentioned it, for me a lot of it was getting trapped on the wrong side. I heard Al talk about limit orders, scaling in, wide stops, buying below bars, selling above bars, and what I learned was, if I used a wide stop and trade small, I could buy here and just scale in 2 or 3 times. I could sell here, scale in, buy, but then I would do the same thing here, and I'd get trapped, and then I would panic and get stopped out up here. And the point is, you start learning you learn from mistakes. You learn by doing. And when you start scaling into moves, you start to kind of realize, hey, when there's an open gap, that is a really dangerous thing. And I don't want that if I'm a scale-in trader. If I'm a counter-trend trader, I want to sell and the market go straight down. If I sold this high, I don't want this. If I sold this, I'm okay with this because I could sell, scale in, and get out. And it's really important to understand limiters. You need to understand the opposite side of your trade. So if there's a buy set up here, that means there's traders selling. There's always traders taking the opposite side of your trade. So if they're selling, you need to understand what they're doing, like right here. Okay, they're sold. Maybe they're starting to make money, so they're starting to regain control, but they haven't done enough yet. And back to the point about micro gaps or gaps, you need to understand them because that is how traders begin to get trapped. If you think about it like this, there's 2 ways you can make money. You can make money selling on a stop entry, and this is from the bear's perspective, or selling with a limit order. Now ask yourself, if you cannot make money selling on a limit order, how can you make money on a stop order? So if the limit order traders are trapped, you automatically know stop order traders are trapped. So they're clearly not making money on stop entries, therefore, and if they're not making money on limit orders, they're getting squeezed here. Now, more often than not, the market's forgiving, and these traders will be able to get out and avoid a loss. But sometimes you get that low probability event where you get a small pullback trend. And every small pullback trend is a low probability event. It's a leg in a trading range that squeezes the counter trend traders because gaps form, and the market continues higher in that same direction. So, again, push up, another push up, another push up, another push up. At this point, you got to ask yourself, several attempts up, bulls are taking profits. Because think about it. If you buy here, stop down here, new high, stop here, rally, pull back, new high, stop here, new high, stop here. And you have to weigh every one of those new highs. There's a lower probability that you're going to get a second leg. If you think about it, why do channels evolve in trading ranges? Well, it's really simple. The first push up, this is the breakout. The odds are extremely high. You're going to get a second leg. But the challenge is this the second leg? Is this the second leg? Eventually, when there's 2 or 3 pushes up, the probability gets lower. So here's a leg up, stop down here. What's the probability you're going to get another leg up? Well, it goes down. And you have to, I hope I don't seem all over the place, you have to weigh your risk reward at all times. So some bulls getting up here. The market is letting traders out that sold high today. And, again, no matter where you bought, let's do like this. If you bought 37 and now the market's at 50, are you really going to put a stop? Are you going to use are you going to have a stop all the way down at 36? No. And the reason is, what's the probability the market's going to go all the way to 41.10 before it goes down here? It's low probability. The market's probably going to pull back first. Therefore, you can't just use, at some point, a super wide stop has a diminishing effect. Therefore, you have to use a tighter stop, maybe here. And that's still probably too far. Maybe here. Well, that still may be too far, which is why traders tighten their stop. Now, at this moment, do you really want to be long at 50 and a stop down here? Well, maybe not. Maybe it's 50-50, you're going to get stopped out. And I'm speaking from the perspective like over here, which is why a lot of traders exit. Take this example. You sold up here or you're short down here. Does not matter. When 35 breaks below 33 or 32, where's your stop? Well, you could put it up here, but what's the probability the market's going to go all the way down here? It's low probability. You do not want to have bad risk reward, and a bad risk reward is 1-to-1. So you're selling, your stop's up here, target's here. That's a 1-to-1 risk reward. You do not want that unless you're getting high probability. Therefore, you have 2 choices. You can tighten your stop, or, well, it's really your only choice, or you can exit the trade. So maybe you put it up here. Now your stop is closer, therefore your risk reward is better. But again, if the probability is still not that great, maybe it's close to 50-50 that the market's going to get back to here, a lot of traders are quicker to exit. So what's another way you can exit? You can exit above a bull bar. And that is the concept behind getting out on a high to buy at the bottom of a trading range, or selling a second entry short at the top of a trading range. The reason traders do that is they are reducing the risk, and the easiest way to reduce your risk is to exit. You have to, and that's another reason behind trading small. You always have to weigh the risk reward and the probability when you're entering. Just like right here. If I'm buying, if this bar closes on a high and I buy, where's my stop? The easiest stop is below this bar. But what's the probability you're going to get a second leg from the prior bar? Well, that's the issue. So you cannot just blindly out, and if I remember, I'll pull up an Excel spreadsheet, or I'll put it in the chat. I'll put it in the chat in a little bit, and then I'll talk about it. But I think it's really important for people to understand the math of trading. And actually, I'm going to pause this and put it in the chat right now, because this is I think the market's really going to go sideways here. I think this is pretty disappointing, so I don't think you're going to miss a lot. So I'm going to pause this and pull up the spreadsheet. So I'm still pulling this up, but 52, good bull bar, but enough of a surprise. 51 might get a second leg down. Some traders sold the close, disappointed with 52. They may try and get out break even. For the bulls, it is a pullback test of the breakouts of the 27 high and the 17 high. So the bulls are defending this measuring gap here. And, I think the reality is, though, I think it's going to close. But the bulls are trying to defend it. The bears see a breakout pullback short and a retest. So it's kind of like this might screw up the bar counter for a second, but it's kind of like a lower high major trend reversal on a smaller time frame. Yeah. So do I find gap up days more difficult to manage than normal? Sometimes, not really. I think it starts to make sense the longer you think about it and the more days you see. When you get a gap up, there's a couple of things. So let's just let me do it like this actually. I just want to kind of get rid of all the bar numbers. There we go. Let me full screen this. So when you get a gap up, the first thing you think about is pullbacks and moving average. Gap up means traders are paying above average to get into a trade. And because of that, then this closer the market gets to the moving average, more people are willing to buy. So gap down, traders not willing to buy down here. Therefore, the market reversed strong enough to the moving average, a place where traders should be willing to sell, and they weren't willing to sell it on here, but it reversed up too strong that traders were worried about selling at the moving average. Therefore, they only sold for a scalp. Let's find here's a good day. Big gap up, far away from the moving average. Well, no one wants to buy up here because they know the market's going to get, to the moving average and get closer to it. Therefore, that's why the market sold off. But as the market gets closer to the moving average and the bears are not aggressively selling, traders become more willing to buy the moving average, which is why we didn't necessarily touch it, but we just raced up. And then look what happened here. Why did the market go sideways? Well, think about it. The bulls weren't willing to buy up here, and the market had a decent sell-off. Now the market's again far away from the moving average. So if the market's too expensive and it'll be cheaper in an hour, are you going to buy above average? Of course not. You wouldn't buy something if you knew it was going to go on discount an hour later. It's the same logic here. Bears more than happy to sell below average, but at some point they don't want to sell below average. They want to sell at the average price, which is why when the market, even here, pulls back a little bit to the moving average, traders sell. But at some point, they've sold for so long but below the moving average that, like right here, they start selling. So again, more sideways. So again, more sideways. But I hope that kind of helps with gap up, gap down days. The first thing I'd look for is a test of the moving average. Give me 1 second here. So I want to explain this for just a second. And this is kind of it's a very simplified explanation of the trader's equation, but it is important to think about. So you kind of have two choices. You can improve your risk reward, which lowers your probability, or you can, and the market's going sideways, so no rush. So you can improve your risk reward, which lowers your probability, or you can decrease your risk reward, in other words, make it worse and increase your probability. It's a balance. And you don't get the best of both. So if you increase your risk reward, obviously your probability goes down. So if you're starting out, and we think about this from a Excel spreadsheet, the easiest way here's one choice. 1 times your risk. So if you're risking 1 point to make 1 point, and it's a simplified version, and you're 60% profitable, that's your result, 0.2. And, ignore the meaning behind those numbers. Just remember 0.2. And if you go for 2 points, risking 1 point, and you're 40% profitable, it'll yield you the same result. Now I know it might be slightly different, but it's close enough for this example. So if you had to ask yourself, what would you rather do? Would you rather try and, you have 2 choices. You can either try and be 60% profitable or higher, or you can try and increase your probability slightly, going for twice your risk. So for example, this is the point I want to make. I think it's 6, 7. That's close enough. What do you think is easier to achieve? Being 45% profitable for 2 times your risk reward. In other words, risking 2 points to make 1. Risking 1 point to make 2. And in today's market, maybe that's risking 8 points to make 14 or 10 points to make 20, 45% profitable. Or do you think it's easier to be 67% profitable, risking 1 to 1 to yield basically the same result? And this is what people do not think about enough. It's the more experience you gain, the easier it is to, know when to get out, be quicker to get out. But starting out, it's really important to try and focus on twice your risk. And just so we can see the chart, it's not going anywhere. Point is, I would really I'd go for twice my risk most times. And the more experience you gain, you can start adjusting that. But the last thing I want to point out, this is what you need if you're going for less than 1 times your risk. So let's say you're going for, 1 point and you're risking, 2 points, let's say, or a little bit better than that. You're risking 1 point. If you're risking 1 point to make 2 points, then we'll do it like this. There you go. It's easier to understand. This is what you need for the same result. You need to be more than 77% accurate in order to be in this realm down here. So the point is, you have to understand with scalping, you need higher probability than you think. 60% really is marginal. Being 60% profitable is the same thing as being 40% profitable at 2 to 1. And if you've heard Al talk about that, it's kind of like getting a C. It's the minimum requirement to pass the college class. It's marginal. Okay, so back to this chart. And this is why I was not that eager to want to buy up here. And yes, the midpoint of the day, that is a reasonable target. I've got this Go to webinar thing in the way. It's somewhere around 56 or 65-ish. So yeah, 65, 75 sounds right. But again, this is why I wasn't that eager to want to buy up here. Is my thought was the market is going to go sideways, 2 down. But I also didn't want to sell because this channel up was tight and I didn't want to get trapped, on an upside breakout. This is why I also mentioned 52. The bears saw it as a breakout pullback short, and the bulls saw this as trying to defend the gap. This was strong enough that the market may get a second leg down. So traders that are buying above 52, they're really hoping that we get a sudden breakout, which is why they gave up on 54, even though it looks like a bad bar for the bears, and then 54 is a bull bar. It's not exceptional. It's kind of like this. It's the same concept. 31, big bear bar. 32 is a pullback. It's testing the gap. Some traders buy above 32, and the follow through is bad. Therefore, give me just 1 second. Sorry about that. I'll be back in just a few minutes. All right, guys, I'm back. Sorry about that. You know, that's kind of little things happen that you have to address. So, again, we were talking over here, and if I hadn't mentioned it, I think I said that here's the second leg down. Bears were probably going to get a second leg down from here, but again, can y'all guess what I'm about to mention? I'm going to do this on a line chart. That's not what I meant to do. What do y'all notice right here? Easy way to find negative gaps is line charts. And to me, this is a very clear gap. The reason why line charts are important is if I go to a candlestick, here's a gap, and it looks like it closed. Institutions trade line charts. Therefore, this is what institutions see. So when a gap does not close below it, this gap's open. So again, I go back to the one question I mentioned earlier. Why are the bears not able to close gaps here? This makes me a little nervous that maybe we do get up to, and there you go. So why? Look right here. Here's the close of, so the bar 16 closed, the bar 54 closed, projected up, takes us right to the August open. That makes me think that we may get up there. It up takes us right to the August open. That makes me think that we may get up there. Sorry about that. But yes, someone asked, I apologize in the chat room. I'm going to butcher the name, so I'm not going to try. But someone asked that they don't understand why people focus on a market when Al says all markets use this strategy. Shouldn't we be able to move to any market and apply a strategy, assuming the trader understands what's going on? Yes, that is exactly the case. The problem with that, though, is the more one trades, the more they realize just how much information is on one chart. We could spend hours talking about this one chart in front of us. There's just so much information that, sure, we can look at this. Why don't we just start looking at all sorts of Forex markets? Well, the problem with that is, why don't we trade this? Buy the close, buy the close, buy the close. And then why don't we switch to euro? Buy closes here, buy closes down here. For one, the first issue is, if you look at Apple, you look at Tesla, you look at all these other stocks for Forex, if the E-mini is moving a lot, then those markets are probably moving a lot. If it's not moving a lot, then the others aren't probably moving that much. And the other challenge is analysis paralysis. If you start looking at multiple markets, it's tempting to trade all those markets at once. And then, how do you decide on what market is better? In other words, if I have 20 stocks I'm looking to trade at once, well, or 10 or 5, how do I make up my mind? I'm always, here's a breakout, but I'm always going to look for a better breakout or a better entry or a better setup. Whereas if I just look at one chart, or one market, I can optimize my entry. So that is why a lot of people focus on one market, especially something like the E-mini or the SPY or the QQQ, the NASDAQ. There's so much information you can see. And yes, I saw Bye Bye Money's comment. As I pointed out, this one blue line is the negative gap. It's also the high last week. So traders want a measure move up here. Also, I'm sure this is the midpoint of the August open and maybe the middle of the day's range, let's say. It's not quite, but maybe it's close. Yeah, not quite. So what do you do here? Well, the bulls are getting a lot of bull bars, and they're starting to close gaps here, which is good. Some bears sold this high, scaled and higher, getting out break even. And, you know, it's probably too early to short. This channel was tight enough. This is the first trend line break. The market's testing higher. But again, I'm still suspicious of the bulls, but I'm also a little worried of bears with gaps. And that leads me to another point. You know, most of the time, the market's in a trading range, which means the market's not, probability is not 40%, but it's not 60%. It's somewhere in the middle. It's close to 50-50. Maybe it's 55%, 54%. You know, you very rarely do you have the moment where the market's exactly 60% or exactly 40%. And that's really important to understand. And what that means is most of the time, the market's very neutral. It's a trading range. It's in the middle of the range. Yeah, you can call it a higher high major trend reversal. I mean, bull trend, trend line break, higher high. This is tight enough that you probably needed this type of major trend reversal here. It's also an expanding triangle. 1, 2, 3, 1, 2. So trend line break, new high, larger trend line break, larger new high. So finally we closed the gap. That's good. But we really need the bears to do more here. You know, again, we are, let me see something. There we go. Fine, figure out how to move that. There we go. So if you look, here's 40.85. We are 2 points above the 45 close, and it's been, you know, 15 bars, something like that. So we're actually at the close now. So this is kind of what I was talking about, where there's no, I don't want to sell because I think the market's going to go sideways or up, but I don't want to buy because I think the market's going to go sideways. And what that means is if you're patient, usually you're going to be right back at the same price and you can think about what to do. One of the biggest problems with trading is where, it's very easy to want to rush things. And one of the best things people can learn is most of the time there really isn't a rush to do anything. You know, just look at most moves. Breakout, you can buy at a better price. Breakout, even here. You know, the 13 closed, 14 closed, the market comes back to it. You know, what about selling the 31 low? Well, or the 31 closed, market comes back to it. So even if you know, the 44 close, I don't have to panic and say, oh my gosh, it's going to go higher, because no surprise, it came back to that close. So the point is, you heard Al mention this on a monthly chart, and it's the same logic. Let me just pull one up. Okay, so you've heard Al mention, I believe it was in 2018, I think. Al was talking about in the webinar, I can't remember, but this looks like it was it. It was either here or over here. But I remember Al talking about how the market was too extreme and he wasn't willing to buy because he knew there was, you know, a 60% chance or, you know, 80% chance, who knows, that he could basically buy the same price or buy a better price a year later. So in other words, even if he didn't buy anywhere over here, he could buy the exact same price level, even if it went higher down the road. So again, if you didn't buy here and the market went up, you could buy again down here. And that's the same logic most of the time for most bars on the 5-minute chart. You know, look right here. The market comes back to this close. And the reason I bring that up is most of the time the market is going sideways. And, you know, if you just look at it. So I'm bringing that up to make the point that you really don't have to. It's very common to want to be in a rush and be worried about missing a move. But if you really just look back, you're usually the market's in a trading range, and you're usually not going to miss that many moves. I mean, even, you know, sure, you don't buy here, it keeps going up, but eventually price comes back down. So the first thing I would say is don't be worried about missing something. You know, you don't. Sorry about that. It's more important to be consistent with what you're doing than to try and make a lot of points. You know, if you think back to Al's videos or his books, you know, he has 3 goals. 1, don't lose money. And don't lose money means don't do stupid things. Don't have a bad trader's equation. The second is make money. And the third is make a lot of money. But the first one, don't lose money, is his first important goal. So let's look over here. You know, what do we have? More trading range price action. Limit order market. Bears sell the 56 high, they scale and hold and higher, get back out at the 62 low. Bulls, they buy the 59 low, scalp out, they buy the 60 low, maybe scalp out. Bears sell the 50 high, scalp out. You know, again, you're in the middle of this tight trading range. And in the middle of the trading range, it's usually the worst place to do things, and stop entries are not that ideal either. Traders are not, instead of buying above this bar and getting stopped out below 52, they're buying more below 52. So they're buying more on 55, scalping out. Bulls that understand that logic, instead of buying 52, may buy the 52 low and scalp back out here. The 52 low and scalp back out here. But again, this could be a trending trading range kind of day as well. Rally, trading range, bull breakout, upper range. So obviously the high of last week, this price level is really important. Sorry about that, I had my mic turned off. Let me go start over. This is the SDS. It's an inverse of the E-mini. And I like to look at it to kind of measure and see if I have any sort of directional bias. So I'll flip to it, and, you know, we have a trend from the open, 3 pushes up, 1, 2, 3, 1, 2, 3, tested this high, the bar 12 high, which is right here, a double top. The bears want a measured move down, which is here. And you can see they're doing a good job at defending this gap. The bears have they're holding below the moving average, which is good, but the bulls are getting good buying pressure here. So if I go to the E-mini, I should see the same thing. So rally, 3 pushes down, tested the double bottom. I'm going to draw the measured move up. I still agree with this, tested the August open. Courtesy of Rose for pointing that out. And we're rallying, we're holding above the moving average. So, you know, that's an easy way to check and make sure that you don't have a bias, because it's really easy to, you know, we see a sell-off and we think, oh, I've got to buy because the market's on discount. I think people have that psychology kind of built into them just because the market's always been in a bull trend. It has more bull days probably than bear days. People say to do that on higher time frames. So it's an easy way to just think about directional, you know, bias. Yep. Rose mentioned limit orders selling above 62 and scalping out. You know, this is a limit order market. Bulls, they want to defend the gap. they've successfully defended it all the way through here. But, you know, eventually, I mean, it's really 50-50. The bulls are holding above the moving average, but you really have to wonder, if the market was really 60%, we would not be going sideways for 12 bars, 13 bars. So even though, you know, you really have to accept the market's really close to 50-50. And if it really was 60%, we would be racing up. So triangle, here, tight trading range, whatever you want to call it. Bears, they sold the 61 low, scaled them higher, getting out over here, disappointed with 62. Or they sold the 61 close, disappointed 62, getting out, break even. So again, it's the bulls. We have about an hour and a half left in the day, so the market may be waiting for, you know, the final hour in the day. And again, don't be surprised. We could easily get a big breakout up or down. Sometimes I'll try. If you look at a tight trading range, often you get a trading range or a tight trading range in the middle of some obvious price level. So what I mean by that is, usually the market will go sideways in the tight range in between two important prices. So you can always draw it and maybe kind of look, here's the August open, you know, maybe we're trying to get down to the 36 high, maybe the 43 low. You know, again, I am suspicious of the bulls. The bulls have had so many chances to get up there, and they're just not doing it. But the bears, you know, they need to show us something. They need to get, you know, they need to close this gap. Yeah, I think we are always in long. And Ethan, let me look here. I'm on the December contract, so for me, the August open, and I don't know why TradeStation does this. My August open for December is 98.75. Let me just check. I may have put it in the wrong place. I don't know why it does that. Yeah, so check, Ethan, see what contracts are on. You may be looking at the September contract. I think we are always in long buy money, but the problem I have is it's what I've been talking about. If it's always in long, how do you trade that? And what are you willing to risk? So you're long right here. Where are you going to put a stop? You're going to put it below 55. Well, again, consecutive bear bars. Rose is hinting in the chat, which I do agree with her. We could get a sudden bear breakout, and you know, this could be it. So if I'm a bull, I'm trying my best to keep this gap open. How long am I going to keep trying? And this may be the give up right here. So always in shifts, depending on, you know, technically it's always long until we get down to the 36 low, but are you really willing to buy here and just hold all the way down to 36? No. So in a strong trend, I'm willing to hold and, you know, stay long. But in a trading range, I want to optimize my entry and optimize an exit and try to get out quickly. So here you go. You know, look back. We're on bar 65. Here's the close. We are closing below all the bars since basically 45. And now all those traders that bought these closes are underwater. And how do you feel if you're a bull and you've held for 2 hours and you're underwater? That's what happens in trading ranges. Yeah, Ethan, I'll look. It could be maybe an issue with the data on my end. As far as the August high, it's not that effective of a way to do this, but I'll look at it later. You know, again, I don't think we're going to doggies high right now. So always in bulls, you know, I'd get out. I'd be out already. You know, maybe certainly out below the prior bar. And it's probably an okay swing short. The bulls, they're going to try and defend the moving average and buy here. But, you know, again, it gets more and more scary for the bulls that are buying at the moving average. SDF like to look at the opposite. They're selling the close at the moving average, but triangle. So we could easily get an upside breakout here. But again, if you're selling here, and this is one thing you'll notice Al does a lot, and I'm sure a lot of traders do it, is there's a lot of stop entries you can take, and if you're quick to make a decision, you can avoid a loss. And for example, let's take even over here. You bought this high and you're disappointed here, you can get out. If you sold below this bar, even 54, as bad as that is, you could scalp out once you're disappointed. Even if you bought above 52, the 53, not a very big bull bar, you could just get out and basically break even. So even if you sold the bar 3 low, here betting on a test of low 1, or the low of the bar 1, if you went short and the market started to turn up on bar 4, if you exit, you can avoid a loss. Al does that a lot, where in a certain situation, he will take a trade where it's reasonable to get a breakout, like the 64 low. And maybe, and I'm just using the 64 as an example, maybe he sells below it and he gives the market 20, 30 seconds, and if it doesn't sell off really quickly, or if it does and hesitates, he'll take his profit. A lot of scalpers do that. So it's one way you can use the tighter stop if you're quick to make decisions. Same thing here, 32, 2 legs down, second leg trap, leg 1, pull back, leg 2, traders buy above it, and they see this, they're disappointed. And, you know, when 33 doesn't go straight up, they scalp out. So 64, disappointed, traders, maybe they get out. For the bears, they see 2 legs down, and there might be more sellers above here. The bears will sell the 65 high, maybe stop above 63, hoping for a lower high and more down. But so far, the bulls are holding the gap open, and this higher low being the gap. Bears, some bears giving up above 65. You know, again, the bears tried to break below and get below 55, close the gap here, and again, they still failed. So probably going more sideways. But good bar for the bulls. Some bulls buy the close, maybe they got out here. Some bought, scaled it lower on 65, getting out break even. You know, again, just ask yourself, where's the urgency? It's so easy to trade in here and get caught up buying at the top, selling at the bottom, and that is just not the right way to do things. You know, there's better opportunities to make money. And don't give up money you've made in the past or earlier in the day by trying to be aggressive here. Yeah, and Suki, you're right. It does feel like after-hour session. And that's okay. You know, a lot of times, you've heard Al mention this, the market will lull traders to sleep, and you'll get a surprise breakout in the final 30 minutes of the day, and it can be really, really hard to catch the move. Let me see if I can pull this one up. 1 second. Yeah, so this is the chart Al would always show a lot. It's a New Year's Eve crash on late in the day, but this was back in 2009. So you can see a big sell-off sideways, and you just look at this and you think there's no way that the market can break out here, and keeps going to, just sideways, and all of a sudden you get this, and this bar is massive. Now obviously we're probably not going to get this, But I always like to think about this chart as it's a reminder of a move could happen at any moment. I mean, just right here at 1440, not that many bars left to get a big, big sell-off. Still always in long, holding above the moving average. Good bars for the bulls. The bulls are trying to trap the bears, and they're trying to get the measure to move up. So we certainly could get to the August open here, but again, I need to see more from the bulls. Possible wedge, 50, 60, 67. Possible wedge, 50, 60, 67. Now, I forgot, but I'll work on getting a timer down here. But 30 seconds left in third minute of the bar. Do I have a daily loss limit? I think it varies. You know, for me, I trade pretty small, and I think that's really important. You know, I think it's, and this might be a better discussion for another time, but you know, I know traders talk about risking, you know, 2% per trade, and I did a YouTube video on that a couple days back, and you can check my channel on it. But my issue with risking 2% is, even if, you know, if you have a really high winning percentage and your Z-score is high, which basically you can Google what that term is, your chances of blowing your account are less, but it still can be problematic. And my issue is, if you're risking 2% and you lose 5 times in a row, you've lost 10% of your account balance. And I think that can be psychologically difficult. So I think most traders prefer to trade much smaller than 2%, arguably less than 1% per trade, and they take more trades because it smooths out the risk. 67 consecutive bull bars, probably going a little bit higher, might be by the close, but again, we've been rallying since the bar 36, and this could be a second leg up, leg 1, sideways pullback, leg 2. It's a bull breakout of a trading range, so, you know, it's closer to 50-50 as far as breakout to the upside. Some traders want a channel, something like that. And if that's the case, it would be a spike pullback channel, spike pullback channel. Maybe you could draw a parallel, something like that maybe. I don't think that matters too much. This is about testing the August open. And if they can do that, it'll be, I mean, this will be an impressive day for the bulls. You know, just look at this. I mentioned in the blog the August 24th low, which is over here, is an important target for the bulls. Some traders bought this close or this low during the August 26th breakout. So they buy here, and maybe they buy more above the bull bar. And this is a target for the bulls, and the bears know that. So bears are stepping aside. That's really similar to yesterday. Let me go back to the 5 minute. It's similar to yesterday, bar 27. Reasonable to buy this low. Strong bear breakout, selling off, but still in the leg, probably a leg in the trading range. Traders will buy down here, betting that the market will get back to this low. Before the market got there, traders sell. Here's halfway, so some traders buy here. If they scale lower, that's break even on the entire trade. Other traders hold, and the market gets back to it. So I do think we're going back to that August 26th low that I pointed out. We're 3.5 minutes into the bar. Sorry, we're 3 minutes into the bar, and look where we are. So if you bought the 66, 67 close, how are you feeling right now? You've been in the trade for 3 minutes, and you're underwater. Is that how a strong breakout is supposed to look like? Of course not. You want a strong, if you're buying a breakout, you're buying momentum. And this is a profit-taking area. This is a new high. Traders sold above the 50 high, and they're selling above the 66 high. The bears want a wedge right there. And this is why they're selling this close. Some traders, the reality is 65 is a bad signal bar, so some traders sold 65 and more higher. Maybe they sold the high of 60, so they sell the 65 high, they sell the high of 60, and this is break even. Other bulls are waiting to buy a 50% pullback of the 64 low and the 67 high. So this is what I mean. I mean, you can, you know, again, I took a few trades in the morning, and I haven't done anything for several hours, but I was also going to talk here and had some other things I had to get done as well. But it's, you know, there's one very important thing I could harp on forever. It's being patient. You do not get rewarded in trading for trading 8 hours a day. You get rewarded for either having a profit at the end of the day or a loss. You know, it doesn't matter if, I know everybody's got a story of how they made a fair amount of money in the first 30 minutes of the day, only to lose it before the end of the close, where, you know, the amount of times I've done well in the first 6 bars of the day, only to give it up and have a losing day by the end of the day. And those are the worst days because you literally just could have stopped trading and done something else and been better off. So again, you do not get rewarded for trading here. You know, just because you're in front of your computer doesn't mean you have to do something right now. So 67, it is arguably by the close. I don't think it's ideal because it's a wedge and 3 pushes up. You can look at the red line I've drawn. Traders buy the close at 67. Maybe they scale in lower, but some bulls may decide to get out break even at 67. Other bulls are going to look at this and say, we formed a gap here, so we're probably going to form a gap here. So what are they doing? Well, look right here. Close at 60, close at 68. It's a gap, and computers did that on purpose. They're trying to trap the bears and create another gap. So probably going at least a little bit higher. Again, you know, I don't like when the market does this. I think it's easy to lose money. It's easy to be hopeful, and it's really a scalping market. But I mean, if I had to do anything, it is always long or holding above the moving average. Probably better to be long than short, but you know, not ideal. So obviously, not that many traders are interested in selling back at the 67 close. So probably going a little bit higher. There's a very small gap here. The 68 close, 60 close. Good bar for the bulls. High one buy, bear bar. Some traders will sell that high, but may take profits back at that high due to the entry bar closing on its high. So what I mean by that is the high of this bar is 325. Excuse me, it's 125. The low of this bar is 125. So let's see if it goes to one even. It let traders that sold here, it let them out really quick. Some traders might just be happy to get out break even, which increases the risk of buyers here. The bears obviously want the opposite. They want this bar to close on its low, but you can see what happened there. Some bears sold. They didn't like how this closed on its high, and maybe they're deciding on getting out break even. And that's the tough part about limit orders is you have to be really quick to make a decision. So probably going higher, it's a micro channel since 64. So 5-bar micro channel, gap here, and another gap. And remember what I said all the way back from the 43 low. Gap. This is why it's so important, and there's even a gap from the 36 high to the 40 low. This is why it's so important to pay attention to gaps, because they can hint at what may happen down the road. Notice close of this bar is 92.75. Oh, the high of this bar, 93 even. Trader sold the close of this bar, and it immediately turned down. But again, tight channel. You know, it's really challenging to make money. I want to actually point this out. I want to get rid of the lines because this is also important. It's really challenging to make money right now as a bear. On stop entries, sell below here, you lose money. Lose money. If you sold below this bull bar, maybe you made money. But if you wait and you sell below the bear bar, it's really hard to make money. You sell below here, your risk is big. You get a second leg down, you sell below here, it only goes a few points lower. So that is a really important sign that the bulls are strong. And you know, it's easy to see these micro gaps here, or these negative gaps, excuse me. So we're getting close enough to the August open in 4100 that we may have to get there. You know, at some point we get close enough to it, we cannot escape the gravitational pull, and we could easily vacuum test 4100. Seems like the only way I'm looking at a question someone asked. It seems like the only way to make money in this market is buying or selling at 50% pullbacks of the prior bar. That happens a lot. You know, if you look at a trading range, I'll give you an easy example. Look at the euro dollar on the daily chart. Daily chart, very big bull bar, but it's closing just under the moving average. We haven't closed above the moving average in a lot of bars. So what do traders do? Well, they buy a 50% pullback of the bar and they scalp out others' hold. Same thing happens on 5-minute charts all the time. So you get let's look here, strong bull bar. Instead of buying the close, why not buy 50% pullback here to here? And there's 50%, here's 50%. Strong breakout bar on 6 and 7. That didn't quite reach there, but maybe 50% is here. And that didn't get reached, but then maybe this is 50%. And you can see that didn't get reached either. But if you take 50% of the range, you just barely got to it. Other examples, traders will sell 50% pullback of this. They'll buy 50% pullback of that, sell 50% pullback of that, more higher. So that happens all the time. And the reason is, you know, if you think about it, why does it make sense to sell the top of the trading range instead of selling the middle? Well, it's because you're improving your risk reward. And a lot of times, if you're trading a stop entry in a trading range or a trading range, it's often going to force you to enter at the middle. And the reason is you sell, you're selling in the middle, you buy, you're buying in the middle. Traders doing the opposite. They're selling, scalping out as it gets to the middle and towards the bottom, buying as it's going down, scalping out as it gets back to the middle, and they sell as it looks strong, getting out. So here you go. 69, arguably buy the close, but why the bad follow through on bar 70? So what did traders do on 71? They instantly sold the close. You know, to me, this is really hard to stay long because I don't want to buy something and, you know, have to sit through a drawdown of 4 minutes of the bar and it just inch up. I'd rather just wait for tomorrow or something else. The other problem is it's 2:41, it's 2:20 Central Time. So you're getting at that point where traders really need to make the breakout happen or else the market's probably going to go sideways. the bulls are running out of time. And the bear's running out of time to get the bear breakout. So, I just think it's really, this is not my favorite type of trading. Wedge top, 1, 2, 3. Possible fail breakout of this wedge top. But micro channels in 65. Bears sold 65, scaled in higher, trying to get out break even. This is, again, I think it's hard to, it's too tight to sell, and it's hard to stay long as well. So it makes me think the market's going sideways. It is possible the bulls give up here. But if they give up, what does that mean? To me, that means just selling off to 85 and getting back to the 65 high. This is disappointing price action. Bear breakout below 70. Micro channels at 65, probably buyers below. And they'll probably look to scalp out. Some bulls bought 69 to close. They might be disappointed here and scalp out. Again, you've still got this gap open here. So, maybe like this. Why is it not doing that? Oh well. So here's a gap from the 60. Let me see here. Oh, that's one. So the 60 close is 89 even, 68 close, 87.50. That gap actually did close. Never mind. 87.50. That gap actually did close. Never mind. So let's see what bulls do back to the 69 close. Again, we're still holding above the moving average. And the bears, they have not made really any money since down here. So it's deceiving, but it's stronger than it looks. And this is a channel. So new high, traders are trailing stops. And the problem here is, even as Rose pointed out, which I totally agree with her, part of the issue right here is even if the market sells off, there might be buyers at the 64 low or the 65 low. And the reason for that is trading range. Big up, big down. It's a higher low, but often a tight channel just becomes a broader channel, which can be a trading range. Bulls, again, they bought the 69 close, disappointed. And look what happened on 72. 69 close was 92.75. The high of this bar was 92.75. Traders trying to get out back at the high close. So again, it's really important to not get excited here. Just look at this. The market's going sideways. Inside bars, but bulls buying the close, couldn't get out, break even. Are we going to go to the August Open or are we going to go to the high the last week? At this point, who knows? It's really close to neutral. And, it's really important here to not be too eager to do anything. It's so easy to go back and forth and change your mind. Sure, you can swing and trade betting it's holding above the moving average and then it's going higher. But again, I don't personally like that when most of the bars are sideways. Crude oil is an interesting chart. It's always fun to watch. So you can see the market broke below. Here's a daily chart. And obviously you had a strong rally. Buy climax, sell climax, big up, big down, probably going sideways. The market broke below the March lows of this year here 2 days ago. And, over here you have to look at it and think, okay, bear breakout, breaking below all this, but what's the follow through going to look like? Bad follow through. And then a very strong reversal. So the market's probably trying to form a bottom. 3 pushes down, 1, 2, 3. So it's kind of a channel. Maybe do something like that. Here's the top of the channel. Here's the bottom. And the market's probably going to rally back to 90, maybe go sideways. But again, just not much time left in the day. So usually if you don't have a swing trade yet, you're probably not going to get one. It's possible we get a strong breakout up or down, but again, what do you have to risk, and are you really going to get anything? Probably not. So let's look at a few end of day examples. So rallying, going sideways. Tight trading range, 5 or more bars at 12:45, which it's 2:45 Central Time, so the same time. The day will close in or near this range 70% of the time, only 30% chance of a bear trend. Better to wait for tomorrow. So look at this. Obviously, this is somewhat similar. We're holding below the moving average here, holding above the moving average. It's a reasonable tight trading range. It might be the same. Tight trading range, here's bar 75, got a bear breakout. So you can argue, maybe this is a double bottom, maybe we'll get an upside breakout. And again, we are really close to 4,100, so we could easily get there. I'm not saying we're not going to get there, but tight trading range, I don't know, what do you risk? Do you put a stop down here? Do you buy here? That's 1 times your risk. I don't know. I do. And I wouldn't sell here because there's not enough time left in the day. And, again, it's kind of basically a gap here. So we'll see, but you have to wonder. See if there's any other days. So let's see if the bulls can get to 4,100 in the August open. By the way, I'm going to start talking in about 15 minutes for the end of the day. I'm going to make a note up here. Okay, so yeah, this is kind of what I was talking about. 44, the halfway point of the day, and 40 bars later, here we are. You're right back to it. So again, patience, being calm, it's really important to just, when you see this, you just start to learn, sure, we're going to rally. We may get to the open, but, okay. Do you really want to hold long through all of this and then just see this sell off at the end of the day? And bar 76, at some point when you get a bear bar late in the day, risk reward is difficult, so it's important to just take profits. Here, we've still got 15 minutes left in the day, so let's look at the daily chart for a minute. Because again, I still think the bulls are going to be a little disappointed. So how could they get disappointed? Well, one would be, a tail, obviously. Close at the midpoint. Maybe we close below the August 26th high, even though I don't think it's that important. We go back to the 5-minute here. See, again, I click the maximize button and it minimizes. Al used to complain all the time about TradeStation. It's a great program, but I do agree with him. A lot of it messes up at times. But I do like the charting. So again, trying to close this gap. Maybe we close below the high of last week. Midpoint of the day. Just curious. That's probably too far, but that would be impressive if the bears got down there. I don't think they will though. So I'll talk about the daily chart here in like 10 minutes. We'll see what the 5-minute does. So overall, coming into the day, the market gapped up, and the way there's a couple things I would think about on the open of the day. One, and it's kind of the same thing. I don't mean to be redundant on the pre-market blog post, but it's kind of the same thing every day, and that is expect a trading range on the open. If you get a gap, expect a test of the moving average, and do not be all that eager to trade the first 6 to 12 bars of the day. Here's the first 6 bars of the day. You know, you don't need to look at bar 1. And Rose does a good job of this, pointing this out when she talks about, you know, she doesn't trade the first few bars of the day. You don't need to be in a rush to buy bar 1 or even bar 4 or bar 5. There's plenty of time to get there. And you can see bears, they're doing a good job. So I'll go ahead and start talking about today. Let me see here. I'll go ahead and start talking about today. Let me see here. So give me just 1 second here. Let me open something up. Okay, so I opened the chat box on the GoToWebinar. Here we go. So first bar of the day. Try and that'll work. I was trying to adjust. I'll do like, give me just 1 second. That's good enough. I didn't like how I was cutting off part of the bar. So first bar of the day, it's a big bull bar closing on its high, gapping up. And again, expect a trend from the, expect either, while we might get a trend from the open, I would expect a test of the moving average. So I'm leery. I want to see follow through. Bad follow through, bulls bought, they're going to be disappointed. So what are they going to do in bar 3? Some traders are going to sell out of longs at the close of bar 1. So they buy the close of bar 1, disappointed. They may try and get out during bar 3, which is what happened right here. It's a bear bar closing on its low. Probably will test the low of bar 1. In general, 20% chance bar 1 is the low of the day. Bar 4, outside up, tight trading range. Traders bought the low of the day. They sold. Bar 3, scalped out. And by the way, just because it's happening and I, again, want to talk about it, this is really fascinating how we just melted away more than 40 bars of price action. So again, just because we're rallying above the moving average, this can happen very easily. And that's also why it's important to take profits late today. Okay, back to here. So bar 4, outside bar, better to wait. Probably sellers above, buyers below. Inside bar, probably more sideways. Outside up bar, so traders bought the bar 5 below, and now bar 6 closing on its high. Probably buy the close. Better to wait for one more bar, but probably going a little bit higher. Always in long, stop below bar 4. Follow through on bar 7, stop below, probably below bar 6. Strong enough breakout, first reversal down probably will fail. And bar 8, another follow through bar, but it's a small body compared to 6 and bar 7. So you may get pullback soon. Some traders sold the high of bar 2, scaled and higher. They're going to try to get out on a pullback. And bulls, they're probably going to buy the low of bar 8. Outside up bar, or it's an outside bar, whatever you want to call it. Some traders bought the close of 7, disappointed on 8 and 9 that they scalped out during bar 10. And another thing I'll point out is a lot of times when you get a reasonable breakout and follow through bar and you want to look for a measured move, very often it'll go up 50%. So what I mean by that is they do. See that right there? That's 50%. So disappointing on bar 10, more traders may look to get out somewhere around here, which is what happened right there. For the bears, bear bar closing on its low, but really part of the same sell-off. Probably buyers down here and not much more lower. Outside up, and arguably a high 2 buy, high 1, pull back, high 2. Some bulls will buy above, stop below, betting on a test of this price level up here. Follow through bar, another follow through bar, but the bodies are getting weaker, testing the 10 high. We have the gap, the 2 high, and the 12 low. There might be more sellers. While there might be more sellers at the 10 high, traders have to wonder, why is there a gap here? Okay. Bar 15, testing the high of last week. Still by the close. Stop down here, probably going at least higher for a second leg up. 16, doji bar, 3 pushes up, 1, 2, 3. Still by the close, but after you get 4 or 5 by the close bars, probably going to pull back soon, and we're at an obvious target, the high last or the low last week. Bear bar, but micro channel, probably buyers below and more sideways. High 1 buy on bar 18, but again, open gaps, this high, this low, the 10 high, the 18 low. Probably not much more higher, but it's difficult to want to sell when you have open gaps here. Outside down, some traders bought the close of 16, bought the close of 15, disappointed with 17 and 18, that they sold above 18 instead of bought, but there's probably buyers below 18. 19 and 20, or 20, closing on its low. It is a wedge, 2, 10, and 17. However, probably more sideways. It's good for the bears. They were able to close they were able to close below the 10 high. However, they really need to close below the 8 close. So right here where my line is, the 8 close and the 20 close is still a measuring gap here, even though it's a negative gap. High 2 buy on 21. You can argue wedge, 1, 2, 3. Might be sellers above. Strong enough bear bars, you may get a small second leg down and get to the moving average in the 12 close or the 12 low, which is what happened right there. Bear bar closing on its low. The bears, they want a bear breakout below a wedge bull flag here and here, breakout below. But you have to wonder, this rally up was tight enough that the market's probably going to go more sideways than straight down. And we got a bull bar. Some bulls buy above the 21 high and they buy more below the 20 low, confident that the market will get back to the 21 high, which is what happened on 24. So you have a wedge bottom on 23. It's reasonable to buy above, maybe stop below 23. Decent entry bar on 24. Outside bar on 25, probably going more sideways. Some bulls may just get out somewhere up here betting on a trading range. They wanted follow through. They got it on 24, but the follow through is bad on 25, which might convince those bulls to get out. Give up bar, testing the highs up here. However, the bulls were disappointed here. They might get disappointed here. And we have a bear bar. So 2 pushes up, 1 pull back 2. It's a double top with the 22 high or the 20 high or the 19 high. It might be the start of the lower high major trend reversal, a few bars down, a few bars up. But again, bears probably need more. $28, bear bar closing on its low, probably a minor reversal down. And the bulls, this is probably not a good enough major trend reversal, so we may need 2 legs down and then 2 legs up. And the 29 and 3 bear bars, but need to break below the moving average. A bull bar, closing on its high, trying to form a higher low with the 23 low, and holding above the moving average. But after 3 consecutive bear bars, might be more sellers above. And give up bar. So the bulls, the bears broke below the 23 low, and they're testing the bar 12 low. Good bar for the bears, but this might be a second leg trap. And the first leg being a wedge bull flag, 18, 21, 23, and the second leg being the 31 low. 32, the bull bar. So possible second leg trap, leg 1, pull back, leg 2, or leg 1, pull back, leg 2. It's a reasonable buy above. However, 31 is a strong enough surprise that 32 might be more of a retest of the 50% pullback of 31 and a retest of 30 low. Some bulls bought the moving average and got trapped during 31, and it's possible they're selling or buying back. They're selling out of longs, back at the 30 low and the moving average, which is what happened right here. So some traders sell, scaling higher, get out, break even, back to 31 close. And we have a bear bar. The bulls tried to form the double bottom with 34. However, the signal bar was weak, and 35 was the bear bar closing on its low. So now there's 3 pushes down, 1, 2, 3. We're testing the 12 low here. It's possible we have to go a little bit lower and fall below 12, but we may not. 35, bear bar, some traders sell it. If they did, they were disappointed on 36. They will try and get out break even. So there might be buyers somewhere down around the 34 low or the 34 close. The 35 close. Bull bar closing on its high, 2 legs down and a wedge. So leg 1, pull back, leg 2, or leg 1, pull back, leg 2, pull back, leg 3. It's also 3 pushes down here, 23, 32, 36, with a double bottom 12. Okay, buy for a swing, betting that we test the high of last week and get a measure move up. Follow through, but not a good bar, probably going more sideways. Another bull bar, but even smaller. 4-bar micro channel increases the odds of buyers below. Outside up, good for the bulls. Small micro gap here. The 40 low, 36 high, increases the odds of higher prices. And we have another bull bar with 41 and then 42. And 43 is a low too short, but very tight channel. It's testing the 32 high here. 43, 32 high. It formed a measuring gap. 44, high 1 buy. You can also call it a wedge. 1, pull back 2, pull back 3. And then 45 is breaking above the high of last week and the high of today. Good for the bulls. The market's forming a bunch of measuring gaps or open gaps here, here, to 33 high. So again, good for the bulls, probably going higher. And 46, failed breakout above the high today. You can call it a higher high major trend reversal, but the problem is when this channel is this tight, there might be more sellers, might be more buyers below than sellers. That didn't really work too well. So 47 and 48, bear bar closing on the flow. Let me do this. 1 second. 48, doji bar. But you can call it a second entry short, second failed breakout of the high of the day. Might be more sellers, might be still more buyers below, and the measuring gap right here. Didn't trigger consecutive bull bars, bar 50, but the bulls have had several buy climaxes here, 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 and here. Might be more sellers up here, and the market will go sideways. Probably will test the high of last week, this blue line, and also the highs up here. Bear bar, good for the bulls, but what will the follow through look like? And it's a bull bar. It's a retest of the high of last week, and the market reversed up. Bulls bought the 50 low, scaled down lower. They may get out somewhere down here. And some traders bought above 52, breakout pullback buy, a retest of this gap area over here. Some will buy, but they'll be disappointed by 53 and 54. That they may get out, break even, and that's what happened here. The bulls gave up. 56, it's a wedge bottom, 1, 2, 3. You can call it a triangle, doesn't matter. The range is getting pretty tight. And 57 broke to the upside, testing the moving average. and 58, 59, 60. 5 consecutive bull bars, probably going a little bit higher, but again, trading range. And I'm not going to spend a lot of time really over here just because it's a large trading range. 60, you can call it maybe a second entry short, first entry here, mark went outside, down, second entry, but again, it's kind of an OO pattern, so make it a second leg down, but you really want to sell just above the moving average when the bears haven't made money selling anywhere here on stop entries. So probably not going much lower. 63, same thing, double top, but tight trading range. And 66, 67, breaking to the upside. 68, trying to close this gap here. 69, second leg up, leg 1, pullback, leg 2, or breakout, pullback, buy. And again, just going more sideways. And at the end of the day, the bears, arguably they got a wedge, 1, 2, 3, or 1, 2, 3, and the market sold off, testing high last week. So on the daily chart, the bears, the bulls did a good job. They got a third consecutive strong close, reaching the August 26th close, 4,100. They got really close to 4,100 actually. 95, so 5 points away from 4,100. I still think this will be the ultimate target. I think the market will get back there. The question is, do we have to pull back first? This is good for the bulls and strong. Weekly chart. Again, strong bull close, closed above the high of last week, but again, 3 consecutive bear bars. There might be more sellers above. So on the daily chart, I think we might pull back first before we get to the August 24th low. I think we will get there, but we may have to test the September 2nd high first. Second high first. So when you get a trend from the open, one thing I'll say, and before I say that, let me see here. Feel free to ask some questions in the trading room chat and I'll answer them for those listening. But when you get a trend from the open, it's really important to remember that 60% of the time the market will form a trading range and go sideways. So what that means is, oops, hit the wrong button there, is usually the market will rally and at least form a trading range for some time. Arguably here, the market rallied, formed a trending trading range, went sideways, broke to the upside, and went sideways. Okay, so that's pretty much all I have to say about the day. Really an uneventful day in the final, last 40 bars of the day. So again, even though when you look at this chart, we rallied from the low to the high, and it's strong on the daily chart, the market really went sideways for most of the day. So I will I'll give the questions a couple of minutes, and if I don't get any, I'm going to close the webinar. Okay, looks like, well, here's one question. Okay, so for beginners, what key places should there have been entries? Yeah, okay. Let me do always in. That's kind of the key focus. So in general, the first thing you look for, it was always in long on the open. In general, first thing people should look for is consecutive strong bull closes, 6 and 7, or maybe it's just 6. You can argue consecutive bull bars here, another bull bar. So traders can buy the close of 6, they can buy the close of 7. And this is why I talk about trading small. You can buy, and you either buy 6, buy 7, put your stop down here, and just wait for a second leg. And, maybe you get Maybe you get out here, maybe you get out here, and otherwise you get out at the lower high major trend reversal. Now, that is still challenging. So what would I do? Because you have to know and recognize this is a trading range. I would focus on trying to recognize always in, recognize it's always in long, and then recognize reversals. You know, go to the trading course. I'm going to actually pull it up here because this kind of ties in for what would I study or do starting out. I'm going to go to the course, and here we go. So first thing I would start with, obviously the getting started videos, charting analysis, market cycle. I would start learning all these, and then I'd really begin to understand this section, support, resistance, basic patterns. So reversals, understand what a reversal is and understand major trend reversals. Most important thing, understand trend line breaks and the second leg up. So as far as for today, best trades, you buy above 6, and you know, if price goes straight up and your actual risk is small, maybe you scalp out, or maybe you wait for a second leg and then scalp out up here. Or, you know, the next best trade, 23, it's a wedge, it's reasonable, but this channel down is tight. The single best trade of the day is either 32 or 36. 32 is not ideal because it's a big enough bear bar on 31. You may get a second leg down. 36 is a wedge bottom, 1, 2, 3, and a double bottom here. So what I would focus on is that Excel spreadsheet that I pointed out. Try to find trades where you can get twice your risk. And when you have big outside bars, it's much more difficult to get twice your risk because that's 1 times, that's 2 times. Most of the time, again, think what I said earlier, you can enter on a pullback. So I would look for things like a pullback. So you can buy here, you can buy bar 12, you can buy 36 or 37. The key is understanding always in and understanding when the market becomes always in. But the first thing I would do is recognize always in and trade small. Let me look over here real quick. Since what percent chance any given gap will be filled? Good question. I don't know the exact percentage. I know most gaps get filled, and they also get filled in a trading range often, but I don't have a, financial on that. Does the wash sale rule apply for the SPY? I believe it does. I'm not a licensed CPA though, so I really don't want to give tax advice on that. But to my understanding, and you can Google this, this is just my understanding, the wash sale is if you buy something and you sell it and then you buy the equivalent within 30 days, that is considered a wash. Again, you may have to Google that one or ask a CPA. Will you be talking about the daily chart? Yeah, I did talk about the daily chart. Again, strong enough breakout. I think traders are going to try to buy a pullback and we'll get a second leg. This magenta line, this purple line is the target, I think, for the bulls. But what we don't know is, do we have to pull back to 4,000 again before we get up there? Can you talk more about a high 1 and a high 2? Sure. So that's a pullback in a trend or a bull leg in a trading range, or bear leg in the trading range. So let's go back to the 5-minute chart. Al's not kidding. That question box really is small. He's always said it was. So yeah, what's a high to buy? Well, it's bar counting and a pullback. So when you have a breakout like so, traders might be willing to hold through the first attempt up. So they sell, here's an attempt up, and then you get a second leg down, here's another attempt. And this is technically a high to buy. Now what's a better example? Over here. So let's say you get a bear breakout, okay? And you're going to sell below this bar. It's a low one short, strong enough breakout, you're going to get a second leg. You sell below 33, it's a low one short, bar 32 is a high to buy, it's a high one. And then you get a bear bar on 35, and then you get 36, which is a bull bar. Well, it's a second reversal attempt after this bear breakout. In general, traders don't want to hold. The second reversal attempt is higher than the first, therefore traders do not want to hold below it. So, an easier way to think through that is in a strong trend, here's a trend, here's a high one, here's a high two. A lot of times, traders, if they're looking to buy a pullback, will buy a second entry. Find a better trending day. Yeah, this is a good example. Strong rally, probably a bull leg. It's either a bull trend or a trading range. Here's a first leg down, pullback, here's a second leg that's subdivided into two legs. You can argue on a 15-minute chart or 10-minute chart, this is the first leg down, pullback, second leg. So the bears, they sold. They're trying to get a second leg down and a lower high. If they fail, the market may reverse. So that is a high to buy. And it looks like that is it for the questions. So that's it for today. I will start talking again on Monday at 9. I believe, 9 a.m. Eastern time, 8 a.m. Central time, I'll start talking. So I hope y'all enjoyed this, and y'all have a good weekend.